Battle for the Hill. Democrats face an uphill task to hold Congress. As voters head to the polls for the US midterms, Donald Trump promises, quote, a big announcement next week. Edging into the red, equity futures are mostly negative as the polls prepare to open. Goldman outlines a plausible path for avoiding a US recession. Europe is set to open lower. Plus, Emmanuel Macron decries the uncertainty for climate policy brought about by Russia's war in Ukraine. We are back at COP27 in Egypt. The future's then pointing lower here in Europe after 2 days of gains. Historically, of course, when it comes to the midterms, US equities historically perform quite well. And there are calls from those who suggest that is there division. If the House goes to Republicans and there's divided government, that could prove positive for US equities. Mike Wilson of Morgan Stanley saying he wants to see more of a squeeze in terms of the jobs market, particularly at the corporate level, to get more bullish on equities. The FTSE 100 currently opening down 0.2%, off by 23 points. We'll continue to monitor as the individual indexes open. The Spanish IBEX down 0.2%. We again have a Euro finance ministers meeting happening in Brussels. Of course, concerns about a recession will be top of mind for officials there. And we go back to COP27 as well throughout the hours for important conversations on that shift to renewables and just to what extent we can implement some of these pledges. The French CAC currently down 0.4%. Let's switch it over and see how things are playing out cross-asset. The situation in China, equities there coming off after, of course, 2 days of very solid gains. COVID levels in terms of infection rates, in terms of cases, back up to levels we haven't seen on the mainland since April. The futures stateside pointing lower by 0.3%. There's a bid for the US dollar, just marginally, 113.18 on the dollar index, just up 0.1%. The US 10-year, 4.22. That inversion continues to be pronounced. The 2-year, the last time I looked, was around 4.7. Bitcoin, a leg lower, 19,791. There's some tension within the crypto markets, currently down 4.3%. But let's get over to Bloomberg's MLive managing editor, Mark Cudmore. Mark, you are looking at producer prices, comparing those between Germany and China. What are you looking at?
Yes, Tom. Tomorrow morning when we're parsing the results out of the midterms, well, actually, hopefully you'll be asleep, but I'll be parsing the incoming results from the midterms. We also get China PPI and CPI data. And I think it's really, really important because Chinese PPI is set to print in negative territory year on year. And that's quite dramatic given the inflation regime we are globally. And of course, it is still the factor of the world. And that, I think, will really put the context for the US CPI print we get a day later. But this time I'm drawing the connection between China and Germany, where we know the trade links aren't just incredibly strong. And these are their two PPI metrics going back over the last 25 years. The white line is China, the blue line is Germany. And you can see that up until about the end of last year, these two traded pretty much completely in tandem, and that makes sense. China is the factor of the world. It's the intermediate process for the finished goods that were produced in Germany. They kind of traded completely together. Now, one of them trades like an emerging market, and that is Germany. 45.8% PPI year on year. Now, this is a country that hasn't seen 10%, beyond 10% in decades and decades. And remember, it's a country that is scarred by hyperinflation almost a century ago. So they're the country supposedly most worried by rampant inflation, 45.8%. China, 0.9% last month, expected to be negative 1.5%. Two big takeaways. One is Russian energy is the driver. The other thing is that this is squeezing the margin for German companies much more than Chinese companies if consumption returns there.
Very interesting indeed, Mark. And that leads, of course, and plays into the calls by some strategists that it now is the time to get more exposure to China, given that room for additional stimulus, given that inflation and some of those prices remained pretty subdued, particularly within the global context. MLive's managing editor, Mark Cudmore, thank you. Now, Americans will go to the polls today in midterm elections, widely seen as the most consequential in years. The vote could tip the balance of power in Washington. President Biden warns it will be tough for his Democratic Party to retain control of Congress. Meanwhile, former President Donald Trump has said he will make, quote, a big announcement on November 15.
This is the year we're going to take back the House, we're going to take back the Senate, and we're going to take back America. And in 2024, most importantly, we are going to take back our magnificent White House.
Okay, let's speak to Bloomberg's Quick Takes Madison Mills, who is in Miami and looking ahead to this important midterm vote. Maddie, what do you think Trump has in store then? No prizes for guessing for his big announcement. It's been teed up. He's been pushed. He's been desperate to make this announcement, hasn't he? And his advisors have been holding him back.
Yes, and campaign experts have also been holding him back. GOP representatives have been saying, look, just hold off a little bit longer until we get through this midterm election cycle, because if some voters are worried about, and they're not a President Trump voter themselves, we could see split tickets, right? We could see voters going, Republican for governor's races, for example, but then anticipating President Trump getting back into office and wanting to provide sort of a check on the presidential suite. So they might vote Democrat rather for the Senate and the House in anticipation of a potential President Trump win down the line. Now, that said, at this point, we've had record-breaking early voting here in the States. 41 million people have already cast their ballots. So it also remains to be seen whether or not President Trump's commentary from the last couple of hours last night has an impact on the election results here. What we know so far, he said, again, big announcement coming November 15th at Mar-a-Lago, his estate here in Florida, just about an hour north of where I am here in Miami. An interesting thing about Florida as well, I should mention, with regards to that early voting. Typically, early voting is a very Democratic activity, but we saw in Florida, the majority of early voters are actually Republicans. So that means we could get results early on here in Florida tomorrow night, and those results are likely in the polling so far to look red.
And we were talking about the fact that President Biden has suggested he's pretty cautious about what will happen with the House. His long-held optimism being dulled, it seems, when it comes to whether or not the Democrats can cling on there. What are the polls suggesting the outcome is most likely going to look like at this point?
Well, you mentioned President Biden. I think it's really important to note that he's been stumping in these blue strongholds, right? California, New York. That is a sign that the president is sensing these headwinds for Democrats. A Republican hasn't won the governor's seat in New York for over 2 decades, right? But we see President Biden in New York this week campaigning for Governor Kathy Hochul to maintain her seat in the governor's office. So that's a sign that Democrats are anticipating these headwinds. But when we look across the states, it is looking rather likely that Republicans are going to take back the House, and it's increasingly likely that they're potentially going to take back the Senate. But there are key races that are just neck and neck at the moment. In Georgia, both candidates for Senate polling incredibly close to each other. Same thing in Pennsylvania. Fetterman and Oz are both at 47% right now. So we're just going to have to see how those results come in. Of course, the states where the races are as tight as possible are also the states that typically have late reporting. Pennsylvania doesn't even start counting their votes until their early mail-in votes until the polls open later today. So we could see a Pennsylvania result coming in on Wednesday. So we're not going to know the answer to the million-dollar question of who's going to take Congress until Wednesday at the earliest, potentially later on if we see a runoff in the Georgia state election.
Okay, Bloomberg Quick Takes Madison Mills reporting from Miami, looking ahead to those important midterm elections. Thank you. Now we're going to have special coverage, of course, of the vote right here on Bloomberg TV from 1 a.m. London time on Wednesday. Joining us now is Scott Teal, Chief Fixed Income Strategist at BlackRock. Good morning, Scott. Thanks for joining us in the studio. What is the biggest factor for markets this week? Is it CPI or is it the midterms?
I mean, I really think it's going to be the CPI number. I mean, traditionally, midterms have been a positive for stocks over the next year. So typically, you see a positive return on equities. Obviously, there's a different environment that we're in, a different regime, and so that old playbook may not apply. So I think it's a little bit tough to kind of just apply a historic comparison. But I really think that the inflation profile, Fed policy response are going to be mission critical for markets. I think any outcome that we see in the midterms is going to be very close to one way or the other, meaning that a very divided Congress, which I think will mean more status quo going forward.
And is that division positive? There's an argument it's positive for equities. Is it positive for treasuries as well?
Well, I think we remain negative on treasuries overall. I think the additional supply, additional risk premium, steepening of the curve are kind of themes that we're working with. I mean, I think government spending in particular is going to be an important part of the landscape going forward. I think regardless of the outcomes.
Okay, and on CPI, and I know you and the team at BlackRock have talked about the fact that you see inflation being stickier than maybe some expect. Should we assume from that you think we're going to get an above the forecast of 7.9% year on year? Are we going to come in above that this week?
Well, it's been very hard to call the individual numbers, right? We saw a big upside surprise in the last number. The market kind of shrugged that off actually dramatically, if you recall, last month. I think that calling the individual numbers is difficult. We do see inflation peaking over the near term, as supply constraints become less. But I think it's, expect more volatility as one of the characteristics of the new regime we're in, and I would expect that again as we saw in the last CPI number.
And I know as well that there is that view as well at the House in BlackRock that there's a risk that central banks over-tighten within this determination to get back, in the Fed's case, to 2%. We've heard from Jay Powell saying that the terminal rate is going to be higher, arguably, than the markets are currently pricing in. Where do you see the terminal rate? And how does an adjustment to 50 basis points in December, as the swap market suggests, change your view, if at all?
Yeah, a couple of important things here. One, 5% has been the peak in the Fed funds expectations, even after the CPI number, even coming in now, we're slightly above that. Our view is that that's where the rate will peak, but we think there is risk that they continue to over-tighten, that they continue to fight inflation, so a higher print leads to more expectations. And we really think that's going to be very important in determining the depth of the recession next year. And so that's why I would say that the CPI number is more important than the midterm elections in terms of market movement.
Is a recession more fully priced into the bond markets than into the equity markets at this point?
Well, we've seen a dramatic downshift in earnings expectations, right? So even if we look into next year, we see kind of relatively flat earnings expectations already, right? Which is a sign that has been priced in. The inversion of the yield curve would also suggest the markets are expecting a recession. We think that's baked in given where policy pathway is heading. But obviously, if they push further, right, that's the risk. They continue to push further on the policy rate, that the recession could be deeper.
We're seeing the yield premium in the US at a 3-year high, and yet the dollar has come off in the last couple of days. It's back a little bit today.
Yeah.
How do you explain that disconnect?
I think this is a very interesting dynamic. So the dollar, we would say, is driven by two factors. One is risk on, risk off, and the other is interest rate differentials. And so both of those, right, are at important crossroads, right? The risk on, risk off is becoming a little bit more of a question as equity markets have stabilized. And as we just talked about, if the Fed is in fact going to stop at 5%, which is where the market's priced, the change in that interest rate differential is also slowing down. So those two factors would suggest the dollar becomes a little bit more balanced. But I think on principle, right, the U.S. has been leading the charge higher in rates. There is a risk-off tone in markets, and those are going to push the dollar stronger.
Okay, still further gains then, potentially for the US dollar. You're seeing that again in the session today. The Bloomberg Dollar Index up a little over 0.1%, put a pressure on the euro and sterling. Scott Teal, very pleased to say, Chief Fixed Income Strategist at BlackRock, staying with us, get more of his calls on the UK in the next couple of minutes. And coming up, Britain's Chancellor of the Exchequer, Jeremy Hunt, considers raising more money from inheritance tax. That's as he tries to fill a £35 billion fiscal black hole. More details on that story next. This is Bloomberg.
COVID has changed everything. People are changing the way they work and the way they travel. Can you explain what you mean?
I think the world is never going back to the way it was fully before the pandemic. And one of the changes, I think, David, has been a change in how we work. Many people had a job at an office. They're not going to be required to come back to the office 5 days a week. And I don't think CEOs per se are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it.
It's pretty much full-service shadow banking with nobody in charge.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Countdown to the Close.
Welcome to Bloomberg Crypto.
Welcome back to the Open. We are 15 minutes into the European trading day. You're seeing losses of 0.3% after 2 days of gains in Europe. Futures in the US, S&P E-minis also lower by 0.3. NASDAQ futures down by 0.4. The FTSE 100 currently trading 7,263. That's a drop of 0.5%. And here in the UK, the Chancellor of the Exchequer, Jeremy Hunt, is considering raising more money from inheritance tax. That's as he tries to fill a £35 billion fiscal black hole when he announces the government's spending plans next week. Joining me now is Bloomberg's UK correspondent, Lizzie Burden. Lizzie, how would this help fill the gap? What is the plan that's being considered by the Chancellor?
Well, Tom, what we're hearing is that the Chancellor wants to raise more tax revenue without raising the inheritance tax. In other words, he'd keep the threshold at which people start paying it at exactly the same level it has been since 2009. And because of double-digit inflation and higher property prices, it would drag more people into paying it. It's a stealth tax rise, exactly the same move that's been pulled by the Treasury on income tax and capital gains tax. It would supposedly help to raise £500 million to help plug, as you say, this £35 billion hole in the public finances. But it would hit traditional Tory voters the hardest. They would pay this more. But at the same time, Sunak and Hunt have been laying the groundwork for the people with the broadest shoulders to pay the most tax over the past few weeks. The trouble is, though, the backdrop is you've got the Bank of England doing active quantitative tightening. We know in the first round of gilt sales last week, there were losses of £90 million. Transpose that, and over the quarter, that's £1.5 billion. The Treasury's covering the losses, a loss, of course, because the bank's selling at a lower price than it bought because of higher interest rates. And put it all together, you've got the Chancellor scrounging down the back of the sofa for a fiscal squeeze, and it's an uncomfortable juxtaposition.
Yeah, uncomfortable indeed. Bloomberg's UK correspondent Lizzie Burden on the latest of the Chancellor there, Jeremy Hunt, looking potentially at inheritance tax as one way to close this fiscal black hole ahead of that all-important delivery of the fiscal plan next week. Thank you. Let's bring back in Scott Teal, Chief Fixed Income Strategist at BlackRock. Scott, do you think the UK government, with this announcement next week, will be able to get the risk premium on UK assets back down to pre-mini-budget levels?
Yeah, I mean, I think it's obviously a very important announcement for the gilt market. Obviously, with the banks stepping in over the last couple of weeks to help quell the volatility, has been very positive for gilts overall in general. I mean, I think for us, the big thing is the Bank of England's acknowledgement, right, that they have to push the country into recession in order to get the inflation rate down to target. And for us, that's a very important step for central bankers because it means that they acknowledge this trade-off, right, between growth and inflation. that is so critical really across all the central bank communities. So for us, in some respects, the bank has been leading that charge in that recognition, and obviously now has to deal with the QT program coming back online after being paused, momentarily.
Yeah, and I absolutely want to get your views views on QT. But do you believe there is a tension between the markets and Andrew Bailey saying, and others within the BOE saying, look, we're not necessarily going to hike as quickly as the markets are suggesting? Do the markets win in this battle over how far and how fast they have to go?
Well, I mean, I think they have to, the markets are going to press them. We've seen the bod vigilantes come back in the UK, right? This has been a classic example with the last month's activity. But, I think the bank is obviously recognizing this trade-off, and we'll see how that impacts monetary policy. And they're suggesting that, unlike other central bankers that are still kind of full bore on the inflation front, that'll be more impactful for their decisions.
And what is your assessment then of QT and how well it's been absorbed or not by these markets? How much of a term premium is added to UK markets?
Yeah, we think more term premium needs to be added going forward, right? There is a tremendous amount of supply coming back in the UK's QT program, but also in effectively the end of investment in the European QE program, and obviously what's happening in the US. So globally, this is a very important phenomenon. Yield curves are still very inverted because of the concern around recession and the policy pathway being so aggressive. So we think more term premium comes in, and QT overall, not just in the UK, but also in the US, and then kind of the end of reinvestment in Europe, which is a very important difference, adds to this kind of pressure on term premium. So expect rates to continue to be higher in the long end.
Okay, further term premium to be added to UK assets. I want to get some of your calls before we let you go, Scott. Tell me why you're not attracted by a 9% handle on junk in the US.
Well, for us, when we look at markets and we look at kind of relative value, we see the front end in the US, in particular investment-grade credit, where you can get kind of 6% yield for short maturity, very high-quality bonds, so investment-grade bonds. Given the kind of the policy pathway and the readjustment there, we think that that's a very attractive asset to own. Not very much interest rate risk and quite a bit of spread and yield priced in. So although obviously, high yield in parts of emerging markets have higher yields, there's obviously more risk associated with those markets. And given our overall assessment of having continued to be kind of more risk dialed down, if you will, we like that front end trade.
So how does emerging market local currency play in to a more dialed down risk profile then?
Well, it's a whole portfolio. So there are certain things that are going to add to risk and certain things that are going to be more stable. But in our view, and it continues to be our view, the valuation and the yield of emerging market local, and if you look, it's actually performed relatively well, is still in our minds a value trade, and we stay with that.
And on investment grade US, you're not overly concerned about the default picture that is emerging?
No, again, you get a high level of spread, 150, 160 basis points of additional spread for owning credit markets. And even at this cycle, when you look traditionally at where defaults are and what's priced in, we still think that's attractive. All-in yields are still very attractive. It's one of our big conviction trades.
Okay, short-end investment grade. That is the call from Scott Teal. Thank you very much indeed. Of course, Chief Fixed Income Strategist at BlackRock, also, of course, talking us through how to think about what is happening in the UK as we weigh up the BOE and, of course, that need to close the spending back and as we look ahead to the midterms. Talking of which, the US midterms, we're going to get more detail on that later in the show. We're going to be speaking to Peter Westmacott, a former UK ambassador to the US with deep experience on that country. That is shortly after 8:30 a.m. London time. Stay with us for that interview. This is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The the country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Welcome back to the Open. 24 minutes into the European trading day. Losses of just 0.2% across the European benchmark. Futures in the US pointing up by 0.3%. We look, of course, to the midterm elections in the US. But Scott Taylor, BlackRock, telling us that really it is that CPI print on Thursday that is going to be the bigger driver of these markets. Let's check in on the individual movers now. A couple of companies reporting earnings. An update as well from Renault. They are now targeting a doubling of their margin to 10% by 2030. Nonetheless, a pretty steep sell-off for that French car maker, down 4.7%. Deutsche Post, that was a beat at the top end. They've also revised up their forecast. Nonetheless, a hit there of 1% on the stock. And Bayer, also a modest beat, saying they're still seeing pretty decent demand for some of their seed products, currently down 0.8%. Let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. Bayer has posted earnings that narrowly topped estimates amid sustained demand for agricultural seeds and chemicals. A key profit measure at the German company's crop science unit rose by a third, but Bayer warned cost increases are likely to carry into next year. The firm says it aims to be independent from Russian gas in Germany by the end of this year. A report says UK boardrooms are increasingly frustrated with London's institutional investors and the proxy agencies that guide them. The survey of FTSE 100 shares by PR firm Tulkin Communications found companies are spending too much time on governance and regulation instead of running their businesses. FTSE chairs say the proliferation of ESG rules has resulted in a culture of box ticking. Lyft shares fell in late trade after weaker than expected rider growth overshadowed better profits from higher fares. The ride-hailing company had just over 20 million active customers in the third quarter, missing Wall Street estimates. The sluggish growth comes in stark contrast to Uber, which reported last week that customers had rebounded to pre-pandemic levels. That's your Bloomberg Business Flash. Tom.
Laura, thank you very much indeed. Stay with us. Plenty more coming up as your markets here in Europe point lower by 0.2%. Selling as well in the futures stateside. This is Bloomberg.
DHL is sending a consistent message with its investments.
The company spent 123 million euros to upgrade its logistics centre at the Cologne Bonn airport, designing it around key strategic goals.
What I love about this building is it actually shows the big mega trends which formed our strategy 2025, which was inaugurated in 2019 when this building opened. So globalization, connecting the world. E-commerce, we have a lot of sortation facilities here for smaller e-commerce shipments. Sustainability, it's a very sustainable building with solar panels on the roof and everything. And digitalization, and well, you can obviously see that it is quite automated.
How did the team pitch this investment to you initially, and how hard was it as a sell for them? How quickly did you turn around and say, yes, this is worth 123 million euros?
Of course, you always have to make sure that you have the right capacity for the growth in the network. And at that time, they came and said, hey, we will really see a strong growth in e-commerce volumes on top of the regular B2B growth. We need more sorting capacity. We need this building. And of course, there are always debates. Does it really have to cost 123 million euros and so on? But fortunately, they convinced us, because then with COVID and the volume surge, we urgently needed the capacity.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
Welcome back to the Open. We are 30 minutes into the European trading day, and here are your top stories. Battle for the Hill. Democrats face an uphill task to hold Congress as voters head to the polls for the US midterms. Donald Trump promises a big announcement next week. Edging into the red, US equity futures are mostly negative as the polls prepare to open. Goldman outlines a plausible path for avoiding a US recession. Europe opens lower. Plus, Emmanuel Macron decries the uncertainty for climate policy brought about by Russia's war in Ukraine. We are back at COP27 in Egypt. Let's check in on these markets then. As Scott Teal was reminding me in our conversation, historically, equities do outperform following a midterm vote, at least in the month afterwards. Goldman Sachs, again, as we said in the headlines, saying that there is still a plausible path for avoiding a recession in the US. Equities here in Europe currently down 0.2%. The DAX is off by 21 points, and the FTSE 100 lower by 37 points, down by 0.5%. Let's switch it on as you see the defensive tilt taking place across these sectors. Worth pointing out as well, the dollar is bid, bonds are selling off, yields are up, so modestly risk off across these asset classes. Technology up 0.5%, healthcare, telecoms, and food and beverage, the four sectors that are in the green. Everything else in the red this morning. Again, as we lead up to that vote, Scott Teal of BlackRock telling me it is more about CPI on Thursday. That is where the importance is in terms of the catalyst for these markets. At the bottom of the list, real estate down 1.2%. But let's get back to COP27. Yusuf Gamaluddin is on the ground for us at that climate event at Sharm el-Sheikh in Egypt. Yusuf.
Hey, Tom, let's talk a bit about heavy carbon emitters, and specifically corporates that have perhaps underwhelmed in delivering with some of their initial goals. And there's nobody better placed to comment on some of the progress and what needs to be done around that than the head of the Danish pension fund, PKA. John Jensen, the CEO, joins us here as part of the COP27 deliberations. John, where do you draw the line here in terms of what is acceptable and what isn't in the portfolio of companies that DKA has?
Well, thank you for having me, but I mean, well, we have looked into our portfolio and we have set goals, and we've done it for quite a while, but our new 2025 goal is to reduce by 30%, or 29 to be exact, and I'm not that worried about that. I'm sure we can make it. So we try to set goals, and then we construct our portfolio around that. That's the way we do it.
How do you operate in a world where there's clearly still a lack of data? What would you like to see here at COP27 in terms of fleshing out the actual numbers and figures that will allow you to make the decisions you need to make to meet those standards?
Sure, data is a problem, and the quality of data is a problem, but we are very practical people, at PKA, and we just do what, with the data we have right now, we construct our portfolio around that, and MSCI and other people will help us, give us the data that we have. So instead of waiting for the perfect data, we do what we can do now, and then data will be better as time moves on.
There's a bit of a credibility issue here at COP27. It's a legacy from previous COPs where there's a tendency to overpromise and underdeliver. Is it still enough to leave the mechanism to be voluntary around steering the finance industry towards net zero? What would you sort of urge for policymakers to do?
Well, it will be fantastic if we could get policymakers together and, force us to do the investments, but I think it's impossible. But what we can do, and what we see in a country like Denmark, is that the Danish local government is setting specific targets. We even have this summer introduced the carbon emission tax on heavy emitters in Denmark and Danish industries. So, I mean, instead of, let the perfect solution stop you from doing what you can do right now, we're just doing it.
So you're arguing for practicality. It's the kind of practicality that we're hearing from the managing director of the IMF as well. She was speaking to Bloomberg Television earlier, and she was saying inflation looks like it's peaked globally. But as far as you're concerned, in your portfolio of assets of $55 billion, inflation's actually not the biggest concern, is it? It's liquidity.
You're perfectly right. I mean, inflation is, of course, an issue and a problem for our members because, their buying value of their pension is lower now. And that we have to help them that way. But the really important thing right now is the lack of liquidity in the market. And liquidity is, we have to meet margin calls every day, so we hedge dollar, a huge dollar hedge. We have other margin calls that we have on swaps and so on. And I find that an issue. We have the liquidity now, but I see some of my colleagues, even in Denmark, they have a hard time, bringing in the cash and the sovereign bonds that you can use as to meet your margin calls.
I mean, it brings back memories from what we saw in the gilt crisis just a few weeks back. The worry is that there's going to be a financial accident somewhere. Do central banks need to, do a U-turn, and especially the Fed going into year end? What do you think?
I'm not sure. I'm glad I'm not the Fed because it's really a tricky question. But what I do know is that it's important that we, make sure that we have the liquidity and so we can meet our margin calls. And, you have to prepare. Some liquidity you can get overnight and some takes a while. But if you come to a point where you have to sell, unlisted assets and so on, it's actually an issue. But for us, we have prepared, so we are ready to buy some of the unlisted assets at a good price, if possible.
Well, a sense of opportunity there. Yeah. Double-digit losses for stock indexes, the benchmarks, at least in the U.S., for example. Double-digit losses for bonds. It's been an annus horribilis by any stretch of the imagination for any sort of conventional mainstream portfolio. As an asset allocator, not an asset allocator, as a person who owns assets, and of course as a portfolio of assets, what's changed in terms of the dynamic in asset management? Do you revisit the kind of view that you have on markets?
We are sort of, in the listed space, we are a passive investor, but with tilts, we have an ESG tilt and so on. But we are heavily invested in unlisted assets. So we have a 55% ratio of unlisted assets in our asset under management. So that's quite a high level. And it's not influenced that in the same way of some of the issues that we see right now. So it's wind farms, solar farms, real estate and so on. And actually, that's been a very stable investment. And that's why we constructed our portfolio now, because in many ways, we have a defined benefit scheme for our pensioners.
Glass half full. I'd love to hear that, especially for anybody with a longer-term pension portfolio. John, great to have you on the program. Thank you for making some time. That's John Johnson, CEO of the Danish pension fund PKA. Tom?
Yusuf Gamaluddin on the ground there. Thank you very much indeed. And we'll have plenty more, of course, from COP27 throughout the following hours and this week. Coming up more on the US midterms, we will be speaking to Peter Westmacott, former UK ambassador to the United States. That is next. This is Bloomberg.
After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun. We are joined by UCLA quarterback Chase Griffin. Not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
The top names in business are on Bloomberg.
The financial services industry, which is a large part of the UK, is very competitive. But it's not the only one. Health sciences, even technology and fintech are very, very bright stars in the UK.
The market environment is a very challenging one. It's not about blaming the markets. The markets is the same for everyone. And that's exactly how we deal with it.
90% of our clients are indicating we need more guidance. And if they want more guidance, that's why they bring their money to us.
Nobody covers business like Bloomberg, your global business authority.
From New York City.
From London. In Sydney.
From Washington.
In Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
How
story.
are you thinking about those dynamics?
Welcome back to the Open. 40 minutes into your European trading day. A bit of a turnaround in terms of sentiment. You had seen losses of about 0.2% across the European benchmark. Currently, though, pairing those losses and range bound for the benchmark. Futures in the US still pointing lower by 0.2%, but again, also moderating some of that risk-off sentiment. As we look ahead to the midterms and as well the CPI print and inflation print out of the US on Thursday. And of course, inflation plays in to that debate for voters stateside. Americans will go to the polls today in those midterm elections, widely seen as the most consequential in years. The vote could tip the balance of power in Washington. President Biden warns it will be tough for his Democratic Party to retain control of Congress. Meanwhile, former President Donald Trump has said he will make a, quote, big announcement on November the 15th. Joining us now, and very pleased to say, is Peter Westmacott, former UK ambassador to the United States, someone with rich experience in working and living and dealing with the relationship between the United States and the UK there between 2012 and 2016 as the British ambassador. So Westmacott, thank you for your time. President Biden has said that democracy is on the ballot at this election. Is he right?
Well, good to be with you, Tom. Thanks for giving me the chance. Well, it's hard for an outsider to really comment on that, but the reality is that even from here in the UK, I think people are looking at the number of people who are up for election who are democracy deniers, if you like, who do not accept that they will, the result of an election that they haven't won, a bit like Donald Trump was saying that before the last presidential election. So I think that's why a lot of people are saying, rubbing their eyes and wondering whether American democracy really is on the line. And of course, the president has taken that fairly risky line in saying that democracy is on the line. And if you don't vote for Democrat, then you don't vote Democratic, then you are potentially going along with a process which is seriously damaging to US democracy. So there is a lot at stake, not least because of this whole election denial business.
Indeed, and given your experience in the United States, working on behalf of the British government, what is your faith in the durability, the resilience of US institutions?
The founders, of course, had this very wise sense that they had to have checks and balances. So you've got an independent Supreme Court, you've got an independent legislature, and you've got the executive. It's more, if you like, checks and balances than there are built into the British system. And it's worked pretty well until now. The worrying thing, I think, now is that some of those checks and balances are beginning to look a bit weaker. We've got a rather politicized, very politicized Supreme Court in the United States. You've also got elections with vast sums of money for the people who count the votes in elections, which means that there's a real question mark as to whether the counting of the votes is genuinely objective. Think back just a couple of years ago to the time when President Trump lost the last election, he desperately tried to get people in states where he thought he was doing well to overturn the result, to find him extra votes in order to give him an election victory. So mercifully, and many of those people were Republican nominees, those people, I would say, did their duty. But the Republicans have been quite keenly putting people in place who are very pro-Trump, or if you like, not necessarily bipartisan in terms of their understanding of the workings of democracy. So I think there are legitimate questions to be asked about whether the system is going to work and whether votes will be counted legitimately. Of course, on both sides, there are people who say that there are election deniers and that there are people who will rig the result. That's itself very damaging, I think, for American democracy and perceptions of America as a leader of the free world. But at the moment, the institutions are holding firm, but it is a tricky moment.
Yeah, indeed, something like 300 Republicans who are on record as being election deniers on the ballot during these elections. I spoke to, Sir Wes McCott, I spoke to Mick Mulvaney, the former White House Chief of Staff to President Trump, and he said that essentially the Democrats had missed the beat in terms of their messaging. Take a listen to what he said, and then I'll get your response afterwards.
The Democrats continue to avoid the conversations that swing voters, people who don't make up their mind until the last 30 days, which are the folks right now who are going to sort of determine the outcome of this election, want to talk about inflation and crime. The Democrats open to talking about abortion, and they're closing talking about election integrity.
So that was the former White House Chief of Staff to President Trump, Mick Mulvaney there, talking about the messaging, the issues that matter to people on the doorsteps. The importance then, Sir Wes McCott, of inflation and the cost of living crisis in the US and how that's playing in to the vote later today.
Well, Mick Mulvaney is a very wise bird. He was in London a few days ago, and a number of us had the chance to hear him. It does seem as though what the electors really do care about are those issues of crime and immigration and inflation and the state of the economy. And it is indeed the case that the Democrats for a while were running more on it's outrageous that Trump and Trump supporters tried to overturn democracy on the 6th of January, just after the last election, and abortion issues and so on. And I think there is some polling which suggests those are not the issues that are going to be the most dominant ones, if you like, as people decide how to cast their vote. But let's not forget, tens of millions of people have already voted. So there's been a lot of early voting, a lot of mail voting this time round. So on the day, it's going to be important, but lots of people have already decided. But I think this is a time when the economy is stupid, to coin a phrase. It really does matter, just as it matters here in the United Kingdom, where people are deeply worried about a cost of living crisis and inflation rates and mortgage rates and so on. So I think in the United States, there are a lot of people who are looking at those other points. And of course, when you're in the opposition, it's easy for you to claim that the occupant of the White House is responsible for all those terrible things that are happening and to exaggerate them. So, yeah, those are the themes, and the Republicans do seem to be making some ground by trumpeting them loudly.
And on the geopolitical story at the moment, Ukraine, there is a sense that there's some division now amongst Republicans. You have potentially the next head of the House of Representatives, Kevin McCarthy, if indeed he gets that spot, on one side saying he wants to see a watering down of support for Ukraine, and Mitch McConnell in the Senate suggesting that he wants to hold the line. The divisions around Ukraine, how consequential could those become?
I think it's a very good point. If the Republicans do end up taking control of both the House and the Senate, and it sounds as though the House is gone and the Senate is still a toss-up, but could well go to them, I think what we're going to see is not, if you like, a change of policy from President Biden in the White House, he, after all, Democratic president, but it may be more difficult for him to get the appropriations, to get the money out of Congress that he will need to continue to support Ukraine. And so that could signal something of a change of policy, which would be very worrying, because I think in terms of supporting the Ukrainians against Putin's war of aggression, it's been the United States and the United Kingdom, some way behind, but nevertheless also in a leadership role, that have made a big difference. And without money coming from Congress, that becomes a good deal more difficult. I think also what the rest of us abroad will be noticing is that if you have got the Republicans in control of Congress, there will be a lot of vexatious hearings and potential impeachments and what we would regard as, largely time-wasting activity by Republicans who really want to score points, if you like, against the Democrats. And if we get hearings all about Afghanistan and hearings about whether or not the president did win the election last time round, I think that'll be rather demeaning for the United States.
Okay, so Peter Westmacott, former UK ambassador to the US between 2012 and 2016. We really appreciate your insights ahead of these midterm elections. Thank you for your time. We're going to have special coverage of the midterm elections right here on Bloomberg TV from Wednesday. Let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. South Africa is spearheading a new plan at the COP27 climate summit to shift from coal to green energy. The $8.5 billion proposal, backed by the EU, the US and the UK, would help middle-income nations to move away from the dirtiest fossil fuel. UK Prime Minister Rishi Sunak, meanwhile, has pledged to triple funding to £1.5 billion for so-called adaptation projects by 2025. Bloomberg has learned the European Commission does not now see a price cap on natural gas as the best way to fix the energy crisis. Brussels presented its analysis of possible actions at a meeting with member states yesterday. The EU is now said to favour a mechanism to spread high gas costs over time. Brazil's President-elect Luiz Inácio Lula da Silva has delayed the much-awaited announcement of a multi-billion-dollar spending plan as he works out how to pay for his campaign pledges. During the election, Lula made promises to boost cash transfers for poor families, exempt more people from income tax, and increase the minimum wage. A report says UK boardrooms are increasingly frustrated with London's institutional investors and the proxy agencies that guide them. The survey of FTSE 100 chairs by PR firm Tulkin Communications found companies are spending too much time on governance and regulation instead of running their businesses. FTSE chairs say the proliferation of ESG rules has resulted in a culture of box ticking. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom.
Laura, here in London, thank you very much indeed. Coming up, the owners of Liverpool FC. They are said to be considering selling the English football club, the US owners, in what could be one of the most valuable sports deals of all time. The details next. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Welcome back to the Open. 53 minutes into your European trading day. The benchmark is down 0.1%. Futures in the US also lower by 0.2%, leading up to the midterm elections in the US that could see the House, possibly the Senate as well, go to the Republicans. A divided government seems to be in the cards. Let's get back to what's happening in the sporting world, though. At 12 p.m., the Bundesbank Symposium takes place in Frankfurt with speakers to include President Joachim Nagel. We're talking, of course, about central banks here. An hour later, the BOE's Hugh Pill speaks in a panel at the UBS European Conference in London. Later today, all eyes turn to the US midterm elections, as I mentioned, and after the bell, we're going to get Disney's fourth quarter earnings. And, of course, CPI on Thursday, by the way, crucial as well, of course, for investors. I flagged this a little bit earlier than I should because I'm so excited about it, mostly because Alex Webb is in the studio. Yes, the business of sport. The American owners of Liverpool FC are said to be considering selling the English football club in what could be one of the most valuable sports deals of all time. Alex Webb is here from Bloomberg Quick Take. He's written an opinion piece about this. Alex, what does this sale say about ownership of football, particularly by US owners?
It's very hard to make money from actually owning a football team. The returns are unpredictable and often very low. The place you really make money is from selling football teams, sometimes just selling a stake in that team. That's what we're seeing with Liverpool. If you look over the 11 years of the Fenway Sports Group's ownership of the team, they've made a cumulative profit, or the club has made a cumulative profit of £27 million. That equates to a 0.8% annualized return. Now, if they sell it, you could be getting in the order of, and it is that sort of $5 billion mooted sticker price, it'll be an annualized return of about 120%. So actually owning the team, not great. Selling it, brilliant.
But why is that an issue? Good for them. They invested in the club. Good management, arguably. They're going to make a decent profit on the sale.
Well, because if you look at the way that a lot of equities are valued, broadly speaking, you get your value stocks and you get your growth stocks. Now, the thing is with growth stocks is that if they wanted to, they could become value stocks, right? That they could say, well, we're not going to be investing this money in growth. We're going to actually just take the profits and return it to shareholders. The struggle is with football teams is if they stopped investing in the growth, then the playing squad would not be as strong as it could be. And this is sort of what we're seeing with Liverpool right now, where they haven't invested as well in the playing squad as in previous years, and certainly compared to the competition. They're 8th in the table. And so the returns then also start to drop off. You don't make as much money. So it's a slightly different calculation from your classic investment.
Okay, and I think we have time for one last one. We squeeze it in. How do you look at this within the context then of what is going on with sports teams, particularly US ownership, whether they're trophy assets for these owners or whether they are these longer-term investments? What does it signal to us about the business of sport when it comes to football?
I think you've got a push and a pull here, right? You've got, on the one hand, they are not looking likely to get their Super League, which would have stabilized earnings, that would have reduced that sort of boom and bust cycle that you currently see. Without that, it's like, well, why should we stay in this business? But at the same time, you have a pull effect that they see Chelsea selling for in the order of £4 billion. And so they're like, well, we can sell for a good price, and it's not looking as good otherwise.
Alex Webb, excellent. Thank you very much indeed on the potential sale of Liverpool FC by Fenway for a decent profit, as we said. Plenty more coming up. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning. Welcome to Bloomberg Surveillance. This is the Early Edition. I'm Danny Berger in London. Francine is still at COP27 in Egypt. She'll be joining us later in the program. But first, here's what's coming up. Battle for the Hill. Democrats face an uphill task to hold Congress as voters head to the polls for the U.S. midterms. Donald Trump announces a big announcement next week. Edging into the red, U.S. equity futures are mostly negative as polls prepare to open. Goldman outlines a plausible path for avoiding a U.S. recession. Europe trades flat. Plus, Emmanuel Macron decries the uncertainty for climate policy brought about by Russia's war in Ukraine. We're back at COP27 in Egypt. So the big story today, and it will continue to be so tomorrow, Americans go to the polls today in the midterm elections. They're widely seen as the most consequential in years. Now, this vote, it could tip the balance of power in Washington. President Biden warns it will be tough for his Democratic Party to retain control of Congress. Now, at the same time, former President Donald Trump has said he will make a, quote, big announcement on November 15th.
This is the year we're going to take back the House, we're going to take back the Senate, and we're going to take back America. And in 2024, most importantly, we are going to take back our magnificent White House.
Well, let's head over to Miami, where Bloomberg Quick Takes Madison Mills has been nocturnal for us up all night. Maddie, first off, thank you so much for your lack of sleep to help us cover this election. All right, so yesterday we got Trump saying he's got his big announcement. I mean, presumably we can expect this is him running for president?
Yeah, presumably. Look, this follows comments that he already made over the weekend at Senator Marco Rubio here in Florida's rally, where he sort of taunted, I guess you could say, current Florida Governor Ron DeSantis, calling him Ron DeSanctimonious. And then later on in the rally, he did mention a potential third try at the White House. So this isn't too surprising coming from former President Trump. But what is interesting is that GOP experts, campaign operatives have said that they were really hoping for Trump to kind of hold off on teasing out a potential 2024 bid until after the midterms. And that's because sometimes this encourages voters to kind of vote against that potential candidate's party. So we could see voters who are maybe on the fence voting Democrat for Senate, for the House, in order to provide a sort of check on a potential future President Trump down the line. But then again, we've already had 41 million early mail-in ballots, so it could already kind of be decided. We've seen in Florida, where I am right now, that Republican voters have participated more than Democrats, more than independents in this early voting. So I'm likely to have an early result tonight, which is great for me. I'm going to have an easy evening coming up here today.
I think you deserve that after this night for you, Maddie. I mean, what, up since 1 a.m.? Look, that is a really interesting point because usually midterms are a referendum on the current president. I suppose I just don't want it to be a referendum on the former president. Now, that being said, it usually means that the party in power at the White House loses seats, gives back territory in the midterms. Is it fair that that's what we're also expecting today?
Yeah, absolutely. And when we look at sort of the balance of the evidence, it does suggest that the national political environment is leaning red. Again, you can always have an upset in elections. And I always like to remember that polling is a snapshot in time that can change as voters actually head to the polls. But even President Biden conceding last night that the House is potentially going to be a loss for Democrats, but still hoping for that victory in the Senate. Those races are really tight, though. And that's because, look, Republicans have fared really well on some of the issues voters care most about this election cycle. Economy, inflation, gas prices, that CPI print we're going to get on Thursday. That's really important to voters this election cycle. And you know, Democrats have been focusing on other talking points. We've seen President Biden really zeroing in on election sanctity, the future of democracy, whereas Republican candidates really focusing on economy. And that is the top issue for voters right now.
Okay, Maddie, thank you so much. Bloomberg Quick takes Madison Mills helping us cover the election out of Miami. And that coverage will continue of the midterm elections right here on Bloomberg TV. Now let's get back to the COP27 conversation. Head over to Sharm el-Sheikh in Egypt, where Yusuf Gamal al-Din is standing by with a guest. Yusuf.
Thanks, Danny. I mean, we get to take the beautiful spot here outside the meeting halls, but there's hard work underway. And joining us here on the set for a few minutes is Ireland's Prime Minister, Micheál Martin. Taoiseach, thanks for making the time. I know you've got back-to-back meetings, but could you give our global audience a bit of insight in terms of some of the initial progress that you've been able to make and what you hope to take away from Sharm over the coming hours?
Yeah, two things. First of all, I think there is a welcome focus on delivery on the commitments that have been made last year in Glasgow. But also there's an increasing focus on loss and damage, what we term loss and damage. Countries that are already suffering from the devastating impacts of climate change, particularly weather events. And this morning I was at a breakfast where we launched the Global Shield, an initiative of Germany and Ghana, along with G7 countries and V20. And it was interesting to hear the Prime Minister of Pakistan, the President of Sri Lanka, Prime Minister of Palau, all talk in very moving terms about the extraordinary devastation brought this year on their countries as a result of severe weather events caused by climate change. And so the message is that along with all of the measures we must take to reduce emissions, we also now have to look at adaptation and creating financial instruments in terms of dealing with catastrophic risk, and through all of us coming together to try and create that buffer for people.
Let's get into some of the domestic priorities for Ireland. Wind energy is at the top of your list. We've spoken to some investors who are saying there are delays, there are regulatory issues in delivering on the major ambitions, which is, I think, 7 gigawatts by 2030. How do you respond to that?
I think we have reformed our planning framework. We brought in new legislation to create a new agency to streamline maritime economic development, and that includes wind farms. And also we have bringing to a close a fundamental rehaul and overhaul of our planning code to make it again faster, more streamlined for people. We have a great asset, it's wind, and wind off the shore in Ireland is particularly strong, and we are in a position by 2030 to have 80% of all electricity generated by wind. We will get there, and we will work with industry to make sure we can accelerate the targets. The European Union is also providing legal instruments, a public overriding clause, for example, that can move offshore wind platforms more quickly.
Taoiseach, there's a lot of debate about the right way to address methane emissions and, 25, 30%. What is your view on that, given that at the moment for Ireland it's 25%, but the rest of the world appears to be moving towards the 30%?
Yeah, I think we have a strong agricultural sector in Ireland, a very carbon efficient method of food production, but nonetheless we can do better, dairy and beef being the big ones. So we have set what are very challenging targets for farmers in Ireland. And farmers understand this in terms of their individual farm enterprise. perhaps more than most in the population. So I think it's a realistic target that is challenging, but that we can achieve. And I think it's better to set targets that are realistic and achievable than shooting for the stars and not getting there.
I want to pull you along to a more political tone to the conversation. Last time we caught up, you were optimistic about the new energy in British politics, that the initial tone was positive. In terms of the Northern Ireland status in the wake of Brexit, how has that tone evolved over the last 6 to 8 weeks?
Well, I think Rishi Sunak is now British Prime Minister, and I spoke to him 2 weeks ago. It was a positive engagement. We will meet again in the coming weeks. He has also met with Ursula von der Leyen. So I think the desire to have a negotiated settlement is there on behalf of the UK government, on behalf of the European Union. Talks have started. And our view is a negotiated outcome is the best way to deal with this, particularly given the enormous challenges we face collectively, the war in Ukraine, the climate crisis, and energy price levels as well. So it makes sense that we resolve this issue, and we believe it can be done by negotiation, and we welcome the positive signals emerging from Westminster and from Downing Street that they too want to resolve this through negotiation.
I mean, just yesterday, Bloomberg reported that the UK is going to legislate to extend the deadline for holding an election in Northern Ireland. I mean, is this helpful or just playing politics?
No, it's I mean, I think we have to have patience. The government is just in. I think we should concentrate on resolving the protocol issue and avoid perhaps an election in the short term that could prove to be more polarizing than previous elections. The focus, in my view, should be on endeavouring to resolve the issue through negotiation. And I think that would create greater stability within Northern Ireland if that was achieved.
Taoiseach, thank you very much for making some time. Great to get the insights. That is Micheál Martin, the Prime Minister of Ireland. Danny, back to you.
Yusuf, fantastic conversation. Seems like the main word there was negotiations, optimism that can happen with the current government. All right, coming up, we're going to continue our coverage of COP27 with Yusuf there. And of course, Francine Lacqua, she's there as well. She's been speaking to World Bank President David Malpass. We'll have more on that exclusive interview next. Plus, Francine will also be speaking with Mark Carney, former Bank of England governor and UN Special Envoy on Climate Action and Finance. Don't miss that later. This is Bloomberg.
COVID has changed everything. People are changing the way they work and the way they travel. Can you explain what you mean?
I think the world is never going back to the way it was fully before the pandemic. And one of the changes, I think, David, has been a change in how we work. Many people had a job at an office. They're not going to be required to come back to the office 5 days a week. And I don't think CEOs per se are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority.
I really think
we are facing a crisis in development, and that means the reversals on education, that means the higher interest rates, the inflation, the shortages of fertilizer, which are really daunting for the developing world. So those are all problems that take resources.
When you look at, of course, what we've seen over the last 12 months, it's a war in Ukraine that's driving inflation, but it's also energy security. How has that changed fundamentally the talk on climate change and sustainability?
It's added to the burden and made even more urgency. So it's the war in Ukraine, but also the giant amounts of government spending that were done on COVID. And so that is putting upward pressure on prices around the world, and that hits the poorest the hardest. They feel inflation the most. They also very painfully are feeling the extreme poverty now and the food shortages.
World Bank President David Malpass there speaking to Bloomberg's Francine Lacqua at COP27. Of course, Francine will be back with the program shortly. But first, coming up, we have more on the U.S. midterms. We're going to be looking ahead to polling day in the United States and the issues voters are most concerned about. That's next. This is Bloomberg.
China's appetite for energy is enormous. The country consumes about a quarter of the world's energy supply, 35% more than the US annually. Its energy needs have more than tripled since the year 2000. That consumption has helped to fuel astonishing growth, but it's come at a cost.
China is the world's largest greenhouse gas emitter. There is no way to tackle climate change unless China reduces its emissions to net zero.
The country's reliance on fossil fuels is also a hindrance to its own growth and the well-being of its citizens.
China is not energy secure. It has a massive import bill for things like oil and gas. It has a long-standing pollution problem, and it is also prone to outages that severely hamper industry.
All this has led the world's biggest polluter to take steps towards a radical transformation.
A lot's happening on Wall Street.
I think Jay Powell said things that were indefensible.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
We think that's the next secular shift.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
It's a challenging dynamic.
This is a level of uncertainty that we haven't had to deal with.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Now, Americans will go to the polls today in midterm elections, widely seen as the most consequential in years. The vote could tip the balance of power in Washington. President Biden warns it will be tough for his Democratic Party to retain control of Congress. Meanwhile, former President Donald Trump said he will make a, quote, big announcement on November 15th. Joining us now to get into all of this is Matthew Goodwin, politics professor at University of Kent. Professor Goodwin, thanks so much for joining us. And look, history tells us that since World War II, the president's party has lost an average of 26 seats in the House, an average of 4 seats in the Senate. Would you say that this is an average year?
Well, in some senses, Danny, of course, we need to follow that trend. And if we look at midterms through the lens of history, we should be expecting some significant losses for Joe Biden and the Democrats. But of course, there are some things that are unique to this contest. Joe Biden's approval ratings are among the lowest in American history. He's basically where Trump was, Ronald Reagan was, and Bill Clinton were at their point in the cycle. Of course, they all went on to suffer losses. And we've got this big crisis around inflation and energy. We've got about 70% of Americans saying the country is moving in the wrong direction. And we've got a large majority of Americans saying that, in their view, Joe Biden is not managing those economic crises particularly well. So my working assumption today is we are going to be talking about another set of losses for an incumbent president and his party.
Matthew, you and I were talking during the break about this idea. Well, first of all, inflation, it's something the world is dealing with, and it has caused some changes in politics throughout the world, be it Brazil, be it France, be it Sweden. Are we looking at more generally, in a global sense, a changing political regime due to this economic environment we're in?
Yeah, so this is one of the things I think people are missing when it comes to the US midterms, Danny. I think if you look at global politics and you look at elections that have taken place in the world since the end of the COVID pandemic and the rise of inflation, what we've seen is a big anti-incumbency effect. We've seen either governments and leaders being kicked out of office by voters, or we've seen them greatly weakened, as is the case, for example, in France with Macron. We've also, interestingly, seen the rise of these more anti-establishment, anti-elite politicians, brothers of Italy, for example, going from nowhere to dominating the polls. Sweden Democrats, Marine Le Pen, even the populists who have lost, like Bolsonaro in Brazil or the similar parties in Slovenia and Germany, have basically remained stable. So this big narrative that we had during COVID, that actually the pandemic was going to make everybody rally around the experts and all of this anti-establishment sentiment would go away, that hasn't really turned out to be the case. And I think America now probably will end up joining that wider trend of a sort of insurgent politician beginning to rally his party against the incumbent.
Does it change American relations with the world? We had a deviation from normal, I guess, is perhaps the way you would describe how Trump as president approached the rest of the world. If we start to get both chambers of Congress that look more like sort of these insurgent politicians, you get President Trump announcing a run again, how does that alter how the world, how Europe specifically perhaps, approaches relations with the U.S.?
Well, the first thing to say, Dan, is that is my working assumption. You've got about an 80% chance of the Republicans taking the House. You've got about a 55 to 60% chance, in my view, of the Republicans taking the Senate. Now, if they do both of those things, if the red wave is bigger than people perhaps are initially estimating, then that, of course, will change everything. It will change the global conversation. I mean, put it this way, within a month, we could find ourselves with Donald Trump back on Twitter announcing that he's running for the White House. That may indeed happen over the next few hours and days. Let's see. And the Republicans essentially turning Joe Biden into a lame duck president, being able to control things like judicial nominees, being able to set out their own legislative agenda, being able to look forward to 2024 with a realistic chance of returning to the White House. So essentially, if that happens, then actually global politics will once again become the Trump show. And so the relationship between the United States, the European Union, China, Russia, India, and so forth, all of those things, I think, will be up for negotiation and up for review in a pretty significant way.
Okay, Matthew, really appreciate your time this morning. Matthew Goodwin there, politics professor at University of Kent. And we're going to have special coverage of the midterm elections right here on Bloomberg TV. That will kick off tomorrow morning. Now, quickly, want to mention some lines coming from Hugh Pill of the BOE that's been speaking at a UBS event. Pill is saying that some de-anchoring of inflation expectations has occurred in the UK. Of course, de-anchoring of inflation expectations is precisely what policymakers want to avoid. At the moment, we have 175 basis points of tightening priced in for the BOE over next year. Shout out goes to our markets reporter Valerie Teitel for flagging that one for us. Pill also saying that the BOE gave a signal that mortgage rate increases are overdone. Now, this does sound like the BOE decision the prior week, talking about that markets have overdone where terminal rates currently are priced. Pill saying that there is more to do now on raising UK rates. We need to raise interest rates, and the UK economy is heading into a recession. But at some point, we must think about what rate is appropriate. All right, let's get to some of our other top stories this morning with the Bloomberg First Word News. Is Leanne Gerrans. Good morning, Leanne.
Good morning, Danny, and thank you. Germany says the U.S. shouldn't underestimate the extent of European worries about American subsidies for green energy. The head of the WTO says the two should try to resolve their disagreement without resorting to a trade conflict. German Finance Minister Christian Lindner says the EU has serious concerns.
Value partners should stay preferred trade partners. We should do everything we can to avoid a tit-for-tat scenario or even a trade war. We need more partnership between the United States and the European Union, not less.
Now, Brazil's President-elect Lula da Silva has delayed the much-awaited announcement of a multi-billion-dollar spending plan as he works out how to pay for his campaign pledges. During the election, Lula made promises to boost cash transfers for poorer families, exempt more people from income tax, and also increase the minimum wage. South Africa is spearheading a new COP plan at the COP27 climate summit to shift from coal to green energy. The $8.5 billion proposal, backed by the EU, US and UK, would help middle-income nations to move away from the dirtiest fossil fuel. UK Prime Minister Rishi Sunak, meanwhile, has pledged to triple funding to £1.5 billion for so-called adaptation projects by 2025. A report says UK boardrooms are increasingly frustrated with London's institutional investors and the proxy agencies that guide them. The survey of FTSE 100 chairs by PR firm Tolkien Communications found companies are spending too much time on governance and regulation instead of actually running their businesses. FTSE chairs say the increase of ESG rules has resulted in a culture of box ticking. Global news 24 hours a day on air and on Bloomberg QuickTake, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Danny.
Leanne, thanks so much. Leanne Gerrans there here in London. Now, coming up, we're back at the COP27 conference in Egypt. I know you all have been missing Francine. She's going to be back with us very shortly. Joining her will be Mark Carney, former Bank of England governor and UN Special Envoy on Climate.
After hardly a full year of name, image, and likeness deals being a reality, UCLA quarterback Chase Griffin already has more than 20 deals with major brands, venture, and charitable groups, all while balancing graduating undergrad in just 2 years and fighting for playing time on the field.
Chase Griffin out of the gun. We are joined by UCLA quarterback Chase Griffin. Not just UCLA quarterback, but name, image, likeness superstar. I am psyched for this one.
This kid could actually be the president of the United States someday.
When it comes to building generational wealth, it's not about the money that you make in college. I'm very excited that I made the amount of money that I made last year. I am even 10 times more excited that I know how to make that money.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it.
It's pretty much full service shadow banking with nobody in charge.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching.
You do not want to miss this
How
story.
are you thinking about those dynamics? Battle for the Hill. Democrats face an uphill task to hold Congress as voters head to the polls for the U.S. midterms. Donald Trump promises a big announcement next week. Edging into the red, U.S. equity futures are mostly negative as the polls prepare to open. Goldman outlines a plausible path for avoiding a U.S. recession. Europe trades flat. Plus, Emmanuel Macron decries the uncertainty for climate policy brought about by Russia's war in Ukraine. We're back at COP27 here in Egypt. Well, good morning, everyone. Welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here at COP17 in Sharm el-Sheikh, Egypt. Now, we had some great interviews all morning. It does seem quite counterintuitive at certain times saying, show me the catch at a climate change conference. But this is really the financing that we're focusing on. We have loss and damage. Does that work? Are we going to get a disbursement of money from the richer country to the poorer countries? And actually, if we're not expecting any big headlines from COP27, what can we expect in terms of action? So we'll have plenty more on that in a second. I'm also pretty excited to speak to Mark Carney on GFANS and all things financials in terms of trying to help with the transition. Also, Americans, we know our biggest story today, go to the polls to decide on which party has control of Congress. So we asked our MLive Pulse survey last week whether any of the potential outcomes could be bullish for stocks or bonds, and here's what our guests had to say.
After the midterms, and this next 6-month period of time tends to be the best season for equity markets.
You don't want to take money out of the market here.
I want to see if this rally ends here because this is a significantly lower high.
People have been, for the most part, underinvested.
I think the real challenge is finding out what is the least painful way of addressing inflation right now.
Many people in a midterm election year don't agree that we're in recession now.
We still think that there's some pain in front of us. And so we think this is really more of a good time to reposition.
Well, Francine, while you set up for your conversation with Mark Carney, let me take you through what markets are doing ahead of this election day. Now, there's a lot of debate as to how much it will really matter, how much it will change the picture. But nonetheless, it is a risk event, as is CPI Thursday. So it's not strange to see that there isn't a lot of willingness for risk-taking. We did just see U.S. futures and the cash session in Europe switch to positive, but it is only up 0.2%. We have seen some pretty large gains over the past 2 days, but that's been petering out somewhat. We did have long-short hedge funds just unwind bets at the fastest rate this year. That's according to JP Morgan's prime brokerage desk. So there is some bearishness in there. For the bulls, it's about pinning your hopes to lower bond volatility. How's this for low bond volatility? Barely any movement in 10-year yields. A lot of supply coming in, weighing on those yields. And finally, the dollar, it is stronger, Francine, after dropping for the past 2 days. But of course, that's just the daily snapshot. I know COP27, you're taking a much more long-term view over there.
I know there is a little bit of chatter, actually, Danny, here about the midterms and what that does, of course, to economic policy in the U.S. But let's park that for a second. We'll talk about taxes and, of course, spending in the U.S. in about 10 minutes. But now we're joined by Mark Carney, former Bank of England governor, and now UN Special Envoy on Climate Action and Finance, also founder of GFANZ. Mark, thank you for joining us, as always. So GFANZ was a big deal. This is basically asset managers, financial services coming together to do their bit. You've been adding members. I think in total you have, what, $150 trillion dollars under assets of the members. Can you all really bring them forward together to make it better for the world?
Well, that's the commitment of each of the individual institutions that span over 50 countries around the world and the entire waterfront of finance. Their commitment is to move those assets towards financing 1.5 degrees. Now, like anything in finance, some will be more successful than others. There'll be leaders and laggards. And part of what we're doing is providing a common framework for them to move. And then very importantly, and I'm on Bloomberg, so I've got to say this, it's about the data. And big announcement around a data platform so that everyone watching, the sophisticated watchers of Bloomberg, but any stakeholder can look and see, well, how's the bank doing? What are its emissions? What were its targets? Is it meeting its targets? And then providing the pressure or the support as appropriate.
But this would be data also that works between jurisdictions, right?
Absolutely.
That's operational. Yeah. Otherwise, it's useless. Why are we still talking about data in 2022?
Well, first off, we need to bring data on a common standard. So, look, 2 years ago when we started this COP journey, if I can put it that way, at least I started this COP journey, you had less than a third of the world's assets or GDP and emissions were subject to net zero targets. Nobody was really counting in a comprehensive and systematic way the emissions of a financial institution, let alone a company and its whole supply chain. Now everyone's committed to do that, or not everyone, but the bulk of people have committed to do it. Over 90% of global emissions now covered, and so that process is happening. Question is, what you're asking is, how do we then bring it together in a simple, machine-readable, easy-to-access way that everyone can see, apples-to-apples comparisons, and then make judgments accordingly? And that's what we're doing.
I mean, the last 12 months have really changed economics, inflation, the cost of living, and energy in general. Does it mean that we need to lower ambitions to make sure that everyone's still included in finance so that they get together on this? Or do you need to be still as aggressive as 12 months ago?
I mean, climate physics doesn't respect why emissions are happening, just the amount of emissions. That's the first point. The second point is, we're seeing that a lot of the answer to energy security problems that have been exposed by Russia's illegal war have to do with sustainability. That's why you've seen a 5-fold increase in the ambition in the European Union for this decade. That's why you've seen the big rollout with the Inflation Reduction Act in the United States. Building out local wind, local solar, hydrogen, which is coming on market fast. These are solutions to not just climate issues, but geopolitical issues.
So where's the smart money in finance going to actually make sure that this goes?
There are two ways the smart money is going. The first is there's an absolute wall of opportunity in just rolling out clean energy at scale. I'll give you one fact. I work at Brookfield part-time, and we have gone from 20 gigawatts in our pipeline of building out renewables to over 100 in just 12 months. That gives you a sense of how fast things are moving. The second place, though, is looking at every single company and figuring out who has a plan within a sector, it doesn't matter which sector or which region, who has a plan to get their emissions down. If they're going to get their emissions down and faster than their peers, they're going to unlock value. And it's that level of sophistication that we're helping to unlock with these plans.
What do you need today from world leaders to make it easier? No, I think you were on a panel with Emmanuel Macron yesterday, Al Gore. It seems that private companies are starting on this trend quite aggressively. Is there something that governments can do, either make it mandatory or just give more of a framework that would help private money?
Well, the first thing, yes, governments should make it mandatory. As you know, with climate disclosure, it's actually taken 7 years for governments to make it mandatory from COP21 in Paris to effectively today. We shouldn't wait, we can't wait 7 years for transition planning. Second thing is in and around nature. I was on that panel yesterday, President Macron and others, and it was about, Finnish Prime Minister, it was about nature and how we can be part of the solution, not all of the solution, but part of the solution there. Much clearer policies from governments and financial institutions can unlock that value. Last point, if I may, there's a huge opportunity for finance to go from, you know, advanced economy companies, some of the wealthiest companies and financial institutions in the world, to nature-based solutions and the accelerated shutdown of coal in places like Egypt. Big announcement coming out of Egypt today, consistent with that, and we'll see more on the balance of the week.
What are the green finance capitals of the world? Is London still one of them?
London is absolutely one of them. Singapore is making a big effort on that as well. I would put both of those out in front. I was in Hong Kong last week, and their intention is there. And, you know, in the end, this is going to mainstream, but those financial capitals that get it and get it early are going to help set the terms. And, you know, it's an agglomeration game. We all know from financial services. So, yes, London's been out ahead. And, you know, the then Chancellor, now Prime Minister, Rishi Sunak, said a year ago, we're going to make London the world's first net zero financial center. That's smart. That's good business and obviously good for the planet.
I know you hate talking about UK economics and the Bank of England, so let me ask you. So let me ask you about it live on TV.
Okay.
I mean, what happens? How should markets look at what they've lived through in the last 2 months?
Well, I mean, there's a number of lessons there: importance of institutions, importance of monetary policy and fiscal policy working, you know, in the same direction. The challenges we're all going to see in financial stability as monetary policy continues to tighten. The UK, like other jurisdictions, has particularly difficult problems on the supply side. You know, I've made the point, and I'll make it again, that it's been exacerbated, made worse by Brexit. So it's a tougher balancing act for the Bank of England. Look, what we're dealing with here at COP is a longer-term issue that we need to deal with today, but will pay medium-term dividends in making economies more competitive, financial services centers more competitive, but actually as well nearer-term dividends in terms of investments, jobs, and growth in a very difficult environment.
But is there a danger that as central banks are distracted, let's say, put it diplomatically, about inflation and everything that's going on, that they'll do less, for example, for greening the economy?
Of course, I have a very high opinion of central bankers, as you'd expect, and they're able to do two things at one time. That's one of the roles in your life, in the life of a policymaker. There's a dedicated committee for monetary policy. MPC gets up, thinks, that's all it thinks about is inflation, what they can do about inflation. There are other committees in the Bank of England, Financial Policy Committee, and the one that oversees the banks, plus a bunch of people who can provide some of the plumbing, not all of the plumbing, to get this net zero financial center in place. And the key thing, I'd go back to GFANZ, if I may, what we're providing on a voluntary basis is the rest of the plumbing, and plumbing that's focused on opportunity, grabbing investment, backing companies, entrepreneurs, innovators to get those emissions down, and in the process, not just manage risk, obviously you got to manage risk, but really unlock the value you're asking about.
Talking about the plumbing, do you worry about liquidity in the markets?
Yes.
I mean, because of what? Shadow banking? I mean, when you take away the tide of cheap money, what are you left with?
Yeah, look, I alluded to that earlier, without question. We're in a market where collateral is going to be increasingly scarce. That's having knock-on effects on liquidity. It's hard to predict exactly when, but you get these jump to illiquidity situations, and as a portfolio manager, as a bank, as a market participant, you have to plan for what is a very fat tail risk. And as we've seen over the last few years, that tail risk can manifest in the otherwise most liquid markets in the world. U.S. Treasuries, gilts as two examples, and certainly as you get farther afield, expect to see it. So pricing for illiquidity. Another point I would add, which we haven't seen yet, is, look, my view, we're moving to a medium term where we have higher inflation on average. We certainly have higher volatility around inflation, and you should get paid for that as an investor. You should get a term premium on longer term debt. And I'm looking at the 10-year today. It doesn't really have much of a term premium in it, even at 4.2%. What it has in it is an expected path of Fed funds rate in the near term.
Which is wrong.
I'm not saying it's necessarily wrong. What's missing is that this path does not magically return to the very low rates of before. Look, on the balance, do I think the Fed's going to have to do a bit more? Yes, I'd put myself in the camp of that. But, we'll see. It's not a decision they need to take today. Let's see how the data is through. My sense is momentum and inflationary pressures in the U.S. economy are still quite significant.
What does this mean for the rest of the world? When we talk about financing for, African countries because of loss and damage, this again links it back to the funding and the debt crisis they're dealing with because of high dollar.
Yeah, it means a few things, and one of them is that we're going to be, yes, in a higher interest rate environment over the medium term. I mean, for sake of argument, don't hold me to this, but think of a 5% 10-year U.S. Treasury on which financing for Egypt, for South Africa, to pick two very prominent ones here, is priced off of. So that becomes, considerably expensive with the risk premium. And part of the question is, how do we de-risk elements, how do we collectively de-risk elements of the big ramp-ups in clean energy that have to happen there? We need our international financial institutions to work much better. We need that wall of money, which is what GFANZ is an absolute enormous wall of money, to become more familiar with these markets and develop in these markets. We need markets like carbon credit markets to truly develop. Lots of headlines about them. And a carbon price, in individual jurisdictions it would be nice. I don't hold my breath for a carbon price. Those are deep, they work when they come in, but there's deep politics with them, and we won't see a global carbon price anytime soon.
Mark Carney, thank you so much, as always, for speaking to Bloomberg. That was the former Bank of England governor and, of course, UN Special Envoy on climate action and finance. Now, we'll have plenty more from Sharm el-Sheikh throughout the day. We'll look at some of the agreements. We're expecting also the president of the commission to speak a little bit later on. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it. You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual. I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lackler here at COP27 in Egypt. Now, welcome back. Joining us now for a robust conversation on COP27 and everything green is Jennifer Morgan, Germany's State Secretary and Special Envoy for International Climate Action. Jennifer, thank you so much for joining us. We had a breakthrough, at least here in COP27. They're talking about loss and damage. Yeah. Are we going to have the money? Are we going to have a breakthrough with richer nations giving poorer nations money to compensate for climate change disasters?
Well, I think, first of all, it was a breakthrough, and it really shows that multilateralism can work, even in the midst of everything that's happening around the world. I think what we're going to see in the next 2 weeks is how countries that are richer, how can they provide more support for those that are most vulnerable? What does that look like? Can we come to an agreement that they feel that they have us standing next to them in solidarity? It's very clear from the decision that this is not about liability. It is not about compensation. It's about how we scale up support.
And do you think there's really a chance? Because there's a lot of Boris Johnson, I know he's not in charge of the UK, saying, look, we cannot afford to do it now. Have the last 12 months, because of higher inflation, the war in Ukraine, and energy security mean that we won't really achieve the goals or even, these reparation loss and damage numbers?
Well, I think, just look at what's been happening around the world. Look at what's happened in Pakistan. Look what's happened even in the UK or in Germany, and the costs, the people, the lives, the economy, and the losses that are occurring from the impacts of climate change. I think that at this COP, this issue is now front and center, that we have to move together. It is not about reparations. It is not about compensation. It is about how we can scale up. And Germany, yesterday, our chancellor announced 170 million euros for a global shield to help protect the most vulnerable.
Jennifer, we have some data. It's very Bloomberg. Data in Germany, for example, shows that private sector funding for climate measures dramatically dropped last year. Why?
I think that we, across the board, need to do better on the private sector leveraging. I think it's a mixture of things. I think partially it's about getting the policy frameworks right in different countries. We need long, loud legal signals that renewables are growing. We know that they are the cheapest. We know that they are affordable, but you need the policy frameworks that are there. You need also to de-risk different places in different countries, in Africa, in developing countries, so that actually the investment is possible. And I think there you need to come in and look at the international financial institutions, the World Bank. What can they be doing in order to prepare that?
What can they do better?
They can certainly increase the amount of climate finance that they're making available, especially for adaptation. But they can also be working in partnership with countries to get the framework right so that there can be more private sector investment.
A number of NGOs are saying that given the size and scope of Germany, and I know there was that pledge from Olaf Scholz yesterday, they should commit around 8 billion euros to this cause. Do you think Germany will do more?
I think Germany is doing a lot, but we all need to do more. Germany has committed to 6 billion euros by 2025. We're one of the second largest donor for humanitarian assistance, which is so important right now as well, separate from our climate finance, of course. But I think we need to actually shift the trillions. That's also on the agenda here. Paris Agreement has a third long-term goal, 21C, for geeks that follow this stuff. And that's about getting all of financial flows into zero carbon, climate resilient. And that needs to happen here as well.
What's it been like being on the politics side? So you've been an activist, right? We used to speak on that. Is it different from the other side?
It's different. I mean, I don't see it as sides. I kind of see it as, I think...
perspectives?
Perspectives, certainly. I mean, I have the same goals that I have had my whole life, working for think tanks, NGOs, and for activist organizations. I feel incredibly honored to be representing Germany here, leading the delegation here, my minister coming in next week. And I think we have a tremendous chance. Germany's working really hard to be a bridge builder, to demonstrate to the most vulnerable that we hear them, we understand, and to be accelerating the energy transformation, because we have to close the gap to 1.5 degrees, and that means we have massive scale-ups for wind and solar that we have to achieve.
Jennifer, thank you so much for joining us today. Jennifer Morgan there, Germany's State Secretary and Special Envoy for International Climate Action. Now, coming up, we'll have plenty more market action. So we look back, of course, at the midterms. Two top analysts see some hope of a sustained bear market rally. So we'll discuss that next. This is Bloomberg.
COVID has changed everything. People are changing the way they work and the way they travel. Can you explain what you mean?
I think the world is never going back to the way it was fully before the pandemic. And one of the changes, I think, David, has been a change in how we work. Many people had a job at an office. They're not going to be required to come back to the office 5 days a week. And I don't think CEOs per se are going to determine these policies. I think workers will, because all of us CEOs, I think, want the best talent. And I think flexibility is going to be the second most important benefit after compensation. All of this, David, has culminated in Airbnb not just being a company about traveling, but now a company about living. So there's this whole new category of travel that's not classic 2-3 nights in a city. It's not long-term housing, and it's completely emerged because of the pandemic.
The top names in business are on Bloomberg.
The financial services industry, which is a large part of the UK, is very competitive. But it's not the only one. Health sciences, even technology and fintech are very, very bright stars in the UK.
The market environment is a very challenging one. It's not about blaming the markets. The markets is the same for everyone. And that's exactly how we deal with it.
90% of our clients are indicating we need more guidance. And if they want more guidance, that's why they bring their money to us.
Nobody covers business like Bloomberg, your global business authority.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
As Americans decide the future of Congress and state legislatures, Bloomberg will be live in Washington, D.C. to cover the results as they break and provide insight about what it means for the country.
We're in a divided country, and these are really close elections.
We take a look at what the races could mean for Wall Street. Special election night coverage starts at 8 p.m. on Bloomberg Television and Radio. And tomorrow, tune in to Surveillance live from D.C. at 6 a.m. for the latest overnight. This is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London with Francine Lacqua in Egypt for COP27. Now, as we gear up for the U.S. midterm elections for CPI results on Thursday, it is certainly a lot of risk events, but some strategists are hoping that this bear market rally in equities can continue, and it does seem like they're coalescing around this idea that it will continue because perhaps U.S. 10-year yields have peaked, or if they haven't, they'll at least be a lot more calm. Now, I'm looking at two analysts specifically, Mike Wilson over at Morgan Stanley and Marko Kolanovic at J.P. Morgan. It's interesting because the two of them have had very different opinions on the market this year. Mike Wilson has been a bear. He's been right on that call, whereas Marko Kolanovic has been hanging on to a more bullish view. However, they're both coalescing around being a short-term bull. Mike Wilson says that this bear market rally survives again, with midterms providing the catalyst for lower bond yields, while Marko Kolanovic writes that near-term yield peak will aid stocks in the short term. So what happens? This would mean that bond volatility would have to be more calm. We have seen bond volatility reach its peak and start to come back down. Perhaps this is because the Fed is moving at a slower pace. Perhaps it's a world that can't keep up with the Fed's increased rate hikes. So we are seeing that come off slightly. Now, to be fair, we have seen U.S. 10-year yields pop up yesterday. Little change today, but that likely has to do with more issuance, a glut of treasuries, a glut of supply of corporate issuances, 15 of them yesterday. It is the season for this. So yes, you might have seen yields higher, but it might be a head fake. Well, Bloomberg Surveillance Early Edition, it will continue in the next hour. Scarlett Foos in New York, Anna Edwards in London. That's up next. This is Bloomberg.
And you know, fundamentally, it's done through the equity markets.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I think markets prefer gridlock generally to one party having control of all the levels of power, particularly when that party has an aggressive agenda.
The most important issue in this election, as in most elections in the United States, is going to be the economy. Now more than ever, with inflation really front and center.
Inflation is a deeply personal experience.
This was not just a supply shock, this was a people shock. And people over the last 2 years are making different decisions.
As soon as we see a result from this election, expect to see the presidential election swing into full force.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Election day in the U.S. Millions of Americans vote to decide who will control Congress. Meanwhile, Donald Trump is all but confirming he'll make another run for the White House. More tech troubles. Shares of Lyft are falling after reporting that ridership growth was weaker than expected. The ride-hailing company is losing ground to its rival Uber. And global leaders try to keep the momentum in the fight to curb greenhouse gases. We're live at the UN Climate Summit in Egypt. Welcome to Bloomberg Surveillance, everybody. This is the early edition. I'm Anna Edwards in London with Scarlett Fu in New York. Matt Miller is off today. Kaylee Lines is on assignment in Pennsylvania. And she's on assignment, Scarlett. Great to see you because, of course, we focus on the midterms. That's the political question hanging over these markets today.
Absolutely. And you're seeing that play out in markets overall. There was some lack of direction in Asian markets initially, but they have settled higher right now. The MSCI Asia Pacific Index currently at session highs, making a fresh one-month high. In terms of industry groups, technology and communication services are leading the gains across the region. But geographically, it's a mixed picture. You have Japan higher by 1.25%, but there is weakness in China. So that's where I want to go to here with the HKSCI index. Chinese stocks down by 0.6%, reversing their two-day 9% advance. COVID rearing its head again. You have an increase in the number of infections and also some official comments that seem to move away from any loosening of COVID-0 and that policy that's been in place for so long. Also, the Australian dollar currently unchanged right now. For a while, it was weaker after data showed a drop in business and consumer confidence. Let's move over to what it means for U.S. assets. And right now, futures are higher by 0.2%. This is very much a waiting game, Anna. We are looking for, of course, any kind of hint from what's to come out of these midterm elections and the big CPI print on Thursday as well. The 10-year yield coming up, currently down 4.19% after the big rally last week we saw in yields. Bloomberg Dollar Index, little changed at the moment. And of course, I want to point to Bitcoin here, below $20,000. Ether and Solana are also weaker as well. There's overall weakness in the crypto space because of drama between the richest crypto CEOs that's playing out. The guys leading Binance and FTT. I don't know how closely you're tracking all of this, but it's having its impact on the crypto space.
Yeah, drama and crypto. Who'd have thought? Scarlett, thanks for that. Let's have a look at where we are on European equity markets. The definition of limbo, really, for European stocks then. Scarlett was talking about how we're in limbo, waiting for the politics to play out stateside. Also waiting for that US CPI print. That comes on Thursday. We have Chinese PPI this week as well. Also another important gauge. But this is the mixed picture we have for European equity markets right now. We're kind of being pulled in two directions by two different sectors here. I pulled one of them out. That's technology, echoing the rally that we saw later in the day on Wall Street yesterday. So up by 1.6%. 10% on technology names here in Europe. To the downside, though, we've got energy names losing ground, and this in conjunction with Brent crude a little bit weaker today, down by 0.9%, 97.07. Our colleagues on the Markets Live blog looking at options markets, though, and saying that there's a lot of activity pricing in an oil price above $100 fairly shortly. So we'll see whether that comes to pass once again. The UK two-year yield in focus. We're seeing buying today at the two-year horizon, buying across the curve, in fact, in the UK, and that's sort of a European story. And then we've got those yields coming down, as you can see there. We heard from Hugh Pill, the chief economist at the Bank of England. Yesterday, we saw a lot of weak appetite for gilts and a lot of focus on supply. Today, the focus from Hugh Pill on inflation expectations, on the labour market, has been saying a lot this morning. Persimmon is a house builder, the biggest house builder, in fact, Scarlett, here in the UK. That stock down by 6.3%. They had been returning a lot of money to shareholders over the recent pandemic and post-pandemic period when lots of people were going out buying bigger houses, out-of-town houses. Now things have changed. All the gilt turmoil, all of the mortgage market turmoil that we saw in recent weeks, that's weighing on sales, weighing on demand. The outlook for the housing market doesn't look great, and as a result, that stock down pretty heavily in session today, Scarlett.
All right, well, as we mentioned, it is election day, and as millions of Americans prepare to vote, President Biden is admitting that Democrats face a tougher challenge holding the House than the Senate in midterm elections. Republicans are currently favored to take control of the House, while the battle for the Senate is considered a dead heat. Anne-Marie Hordern, Bloomberg Washington correspondent, joins us now from D.C. with the latest. Anne-Marie, good morning. Always good to see you. You've got a busy day ahead of you. Tell us a little bit about President Biden's last-minute campaigning and why he would seem to give up completely on the Democrats holding the House.
Good morning, Scarlett. Great to be with you. And it's not just a last busy day ahead of me, but really this could be going on for days. Remember, there's a lot of mail-in ballots. Some of them in some states can't be counted until Election Day. So like 2020 presidential election, we may not get the final composition till later in the week. Or even if Georgia heads to a runoff election, we may not know the makeup of the Senate until December. So it's a really bit of a change of tune from the president, right? Because over the weekend, he had said in one of his rallies that we're going to keep the House. And then last night, coming back from this rally for Wes Moore, the gubernatorial candidate in Maryland, he was showing a little bit of acknowledgement that they are down in the House. And it does seem like the Republicans are poised to take the House. If you look at all the polls and the data analysis, there's a big question of whether or not it's going to be a wave or a tsunami, but it does look like it's going to be red in the House. So it really comes down for the Senate, and that's what everyone's going to be watching, because it really is going to be a dead heat, and whether or not the Democrats can maintain control or the Republicans are able to flip a seat or two.
Yeah, and if some of that goes to December, then we could be waiting, as you say, quite a long time. Anne-Marie, the former president, Donald Trump, all but confirmed his widely anticipated third run for the White House. He spoke at a rally in Ohio. Let's listen to what he had to say.
I'm going to be making a very big announcement on Tuesday, November 15th at Mar-a-Lago in Palm Beach, Florida.
So, Anne-Marie, he waits until after the midterms to make the announcement, but I suppose the announcement of the announcements is something in itself. And I suppose whether he runs or not, something that will hang over people's decisions around these midterms.
Yeah, and he's been teeing this up for days now. Over the weekend, he said, look out for my rally in Ohio. I'm going to have some big news to say. I mean, this wasn't great for J.D. Vance, was it? He was there supposed to really drum up the support for him, but it seems like the former president is just trying to drum up support for himself. So it's highly anticipated. He's teased it over and over again. He will be making a bid for a comeback. This would be his third bid for the White House. And Anna, as you say, this now has a lot of questions about others that are in the race that have been laying the groundwork since 2020 to maybe eye a presidential campaign. This is the governor of Florida, Ron DeSantis, who's also up for re-election, highly anticipated to win. This is his former vice president, Mike Pence, who, by the way, on November 15th, is starting his book tour around the country. You also have other individuals like former Trump's Secretary of State, Mike Pompeo. The issue that these individuals will have is that the former president has really gotten a lot of people out at these rallies. He's really backed a number of candidates. Depending how they do, though, in the midterm election, could potentially hurt his chances. We'll have to see. But it does look like he is definitely going to run. And as he said, he has a big announcement at his Mar-a-Lago resort on November 15th.
President Trump stealing the spotlight for himself. Who would have thought? All right, thank you so much, Bloomberg's Anne-Marie Hordern in Washington. And of course, she will be part of our team coverage throughout the day. And tonight, our midterm special begins at 8 p.m. Eastern Time. Now, moving along to global tech news, NVIDIA, the most valuable chip maker in the U.S., has begun producing a new processor for China. The company says it conforms to new rules aimed at limiting the country's access to artificial intelligence computing. So let's bring in Alex Webb of Bloomberg Quick Take for more. Alex, NVIDIA says it's figured out a way to make a chip for sale that follows U.S. rules, that meets U.S. rules?
Yes, so the chip that is currently its top of the range product in this space has processing power of 600 megabits per second. That is the limit. Anything above 600 megabits per second, you're not allowed to sell in China, so it's essentially downgraded it. It's come out with something which is 400 megabits per second. Now, what these chips are used for is they go into data centers, and they are really handy when it comes to processing artificial intelligence functions, deep learning, as is often known. Is therefore a very cost-effective way. If you put it in a data center, can be used for multiple applications. The US has concerns about China's accelerating efforts in artificial intelligence. That's why it was targeted.
Okay, and in other tech news, or tech meets transport news, I suppose, Alex, Lyft results, we got those, of course, suggesting that that business might be losing ground to Uber. Where do we stand in the ride-hailing wars?
Yes, it's not just that Lyft had a disappointing quarter, it's that Uber had a quarter that outperformed when it came to the number of passengers they were able to recruit. Now, often this tends to track back to how you spend your money. Do you spend it marketing to get customers, or do you spend it trying to attract drivers? And if you look at that number, Uber has got as many drivers as it had pre-pandemic, Lyft does not. Of course, if you have more drivers, there's less surge pricing. Less surge pricing means you get more passengers. So it looks as if it's to do with the way that Lyft has allocated its capital.
Yeah, another example of the pandemic widening the gap between the haves and the have-nots. Alex Webb, thank you so much of Bloomberg Quick Take. UN climate talks continuing in Egypt, where dozens of world leaders have already addressed delegates' warning of climate catastrophe unless urgent and substantial action is taken to tackle the effects of global warming, I should say. The president of the World Bank told Bloomberg that more needs to be done to assist poor nations, which of course are dealing with a confluence of challenges.
It's added to the burden and made even more urgency. So it's the war in Ukraine, but also the giant amounts of government spending that were done on COVID. And so that is putting upward pressure on prices around the world, and that hits the poorest the hardest. They feel inflation the most. They also very painfully are feeling the extreme poverty now and the food shortages.
So for more now, let's bring in Bloomberg's Francine Lacqua at COP27. Francine, what is the tone of the conversation among attendees about committing to spending for tackling climate change?
Good morning, Scarlett. Well, I have to say, show me the money might be a very crass way of defining what needs to be done at a climate change conference, but really it's all about the financing. So we're exploring exactly what this means. There was a breakthrough on Sunday, and no one's taking it away from the participants. Loss and damage. The idea that richer nations have to give money in terms almost of reparation to the poorer nations because of their emissions and the weather challenges like we see in Pakistan that they have had to be dealing with. But actually the money question gets very complicated very quickly. A lot of the big emitters say, look, they don't, or they're behind the idea, but it's also going to be quite difficult to get money right now. Remember what we've lived through in the last 12 months. So for optimism, instead of these big arching ideas, but we do see quite a lot of activists that say, you know, we are on a trend of money pouring into the right places, and that won't be taken away. But I would look for optimism to some of the smaller deals. We had Saudi Arabia with some pledges. We, for example, had the UK with some pledges, and also some of the bilateral agreements. And so if you look at the details, again, we're advancing, maybe slower than we were hoping 12 months ago at Glasgow when some of the pledges were put in place. But again, remember, Scarlett and Anna, this is really about, you know, putting the detail into the big thoughts and the big signing of agreements in Glasgow last year. This is action, and so with action, as you know, the devil's in the detail, and for the moment, we just don't have it yet.
Yeah, this is the implementation COP then, Francine. The perfect person to speak to on a day such as today then, Mark Carney, because you can tap into his experience, of course, as a central banker, thinking ahead to the inflation figures that are due out later this week from the United States. But you can also lean on his substantial experience in the climate change fight, something that he was leading at the BOE and continues to be very involved in. What stood out to you in your conversation with him?
Yeah, and he was, he's always brilliant to speak to just because he does have these two hats, understanding deep knowledge of economic policy together with the economy worldwide, inflation, of course, the cost of living. And now he has another job, which he does part-time, GFANS. Now, this was an alliance of financial companies basically coming together in Glasgow 12 months ago and pledging their support and their transition to net zero in terms, for example, of the projects that they finance. The main question, which I have to say he answered maybe not as clear as some would have hoped to, is that, yes, their members have been growing from 450 members, and we're talking about all financial institutions, to 550 members today. That's a lot of trillions of dollars under asset management. I wanted to ask him whether the framework needs to be a little bit less aggressive to make sure that all the members stay together. So, philosophically, Anna, the question is, do you want to be less aggressive to make sure that members stay together and they push forward, even if it's at a glacial pace, or do you want to be very aggressive and have fewer members? Now, he says, look, if you look at financial institutions, because the health of these institutions are very different, because they worry about liquidity and because they worry about the markets, given what we're living through in monetary policy, they're going to go at different pace. And so he says it's also not fair maybe to evaluate all the members by the same standards. And he says we're going to see different kinds of progression, but the trend is there. They want to do more to finance it.
Yeah, and so he says those GFANS members, some will do better than others. Fran, thanks so much. Thanks for the update. So Francine Lacroix at the COP27 event in Sharm el-Sheikh in Egypt. Coming up on the program, we'll talk to Ron Temple, Lazard Asset Management co-head of multi-asset and head of US equity. What kind of bounce in stocks would he expect to see if we do see stalemate in US politics? With that in mind, we'll talk about the US midterms with Elizabeth Braw, American Enterprise Institute senior fellow. She joins us shortly. She'll give us her domestic thoughts on the US, but also the international questions at play here. Plus, the energy crunch in Europe could trigger shortages for years to come. Read more of today's big take story on Bloomberg.com or on the terminal. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg. I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Scarlett Fu in New York with Anna Edwards in London. Matt Miller is off for the day and Kelly Lyons is on assignment in Pennsylvania. There are signs of life in the corporate bond market, and it is putting pressure on the U.S. Treasury market. This is the 10-year yield, and what you'll see is it's making its way back towards the highs that we saw in late October. The resistance level of about 4.3%. We're not there yet. We're just under 4.2%. Again, highest since late October. Companies are busy tapping the bond market. Bloomberg counted 15 U.S. companies launching high-grade debt deals, led by Oracle, which of course needs to fund its purchase of Cerner. Now, timing is of the essence here because they want to get ahead of the CPI number on Thursday and also the Veterans Day holiday on Friday as well. So joining us now to put this all into context is Priscilla Azevedo Rocha, Bloomberg credit reporter in London. Priscilla, the calendar works out, as I mentioned earlier, but borrowing costs have been rising. What does it say that U.S. companies are willing to move forward with debt sales now?
Hi, Scarlett. So it shows that the market, like the more rates in the way, and companies, they are taking advantage of a little window of stability in the market. So that means that before the holidays, as you mentioned, the CPI print, which will give like this kind of shape of what is the recession going to look like next year, if there's going to be a recession and things like that. So they're taking advantage of this moment of stability to come and take their funding from the bond markets.
Okay, this is really interesting developments, isn't it? Because you've seen, Priscilla, good morning, the index tracking credit risk is now down for 5 consecutive weeks. This is the window of stability that you've been talking about. Why was that not disrupted by a pretty hawkish Fed? Another jumbo hike, and the Fed saying, look, terminal rates are going to go higher than we'd anticipated. Why was that all not disrupted by this? Or did it just encourage people to come and to move forward their capital raising plans?
Hi, so I think it's the second part of this, because now we've seen the rates are like as higher than we forecasted. It has incentivized people to come now, because what next year is going to look like, it might be very different. We know we have elections now that might change the composition of the U.S. government, that might change the expenditure of the U.S. government. And so now that has led to some stability in the market.
Okay, Priscilla, thanks so much. Bloomberg's Priscilla Azevedo Rocha joining us there with the latest on credit markets. And for a broader look at markets and the latest moves, check out the Markets Live blog. MLIV Go is the function to use on your Bloomberg terminal. This is Bloomberg.
When I started, I had no idea it was going to turn into this, which is a tracksuit empire. I don't have any investors. All this is all money in. This is me going out and hustling, bringing that money back, and just building it, building it, building it.
You gotta think about a person that was homeless at one point, didn't really have any money coming in. The fact that this person was relentless and just determined to succeed and not let rock bottom define him as an individual.
I can take things and put them together and take them apart and make them better and put them back together. I respect the craft, so I don't want to minimize and disrespect the value of each step of the craft and do by machine what should be done by hand.
multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Let's get you up to date with news from around the world. Here's the first word. In China, hopes are fading that authorities will lift a lockdown of the area surrounding the world's largest iPhone factory. COVID cases have more than doubled in the city of Zhengzhou. A 7-day lockdown of the area that houses Apple's global iPhone production base expires on Wednesday. The local government may end up extending the curbs. In the UK, Chancellor of the Exchequer Jeremy Hunt is considering raising more money from the inheritance tax. Bloomberg has learned that he's looking at freezing the threshold at which inheritance tax starts to be paid. Right now, that level is about $373,000, and it's due to be kept at that level till the 2025-2026 tax year. Hunt wants to extend the freeze another 2 years. That's a move that could raise about $500 million. And Congress is not happy about it, but behind the scenes, the Biden White House is urging banking giants such as JP Morgan and Citigroup to keep doing business with certain strategic Russian companies, such as Gazprom. The administration is trying to hinder Russia's advances with sanctions while avoiding a global economic catastrophe. House Speaker Nancy Pelosi says the attack on her husband would be a factor in deciding her political future. In an interview on CNN, Pelosi also expressed dismay that Donald Trump and Elon Musk had cast doubt on the attack. Pelosi's husband, Paul, was seriously injured by an intruder who authorities say was looking for her. Nancy, it seems to me, if anything, Nancy Pelosi might be emboldened more and want to fight back by running again.
Yeah, that's certainly one way you could run it. Asked how he is doing. Her husband, of course, she says he is doing okay, but it is a long haul. You can completely understand how that kind of attack on your partner, or indeed aimed at you, might impact how you might respond. So that's something that hangs over the midterms, perhaps. Also something that influences people around the time of the midterms. The fact that former President Trump, is heavily suggesting that he might make another run at the White House in 2024. Let's get back to a markets perspective, though, next on all of this. Scarlett, we'll be talking to Ron Temple, Lazard Asset Management co-head of multi-asset and head of U.S. equity. What does he expect to see in the year after midterms, typically good for equities in the U.S.? We'll have that conversation next. This is Bloomberg.
What are the biggest challenges for General Dynamics, and what are the biggest opportunities?
So I think in any business, the challenges are solving complex problems that come to you. You know, the problems that come to me and my senior leadership team for resolving tend to be highly complex and nettlesome. So your ability to solve those complex problems are an important element, I think, of the value that we add to the company. And then I think opportunities, you always want to make sure that you've got a creative enough mind, an open enough mind to be able to see around square corners. What am I missing? You know, the why questions are really powerful. Why are we not doing this, or why are we doing this? I ask those questions a lot, and in the answers, you can sometimes tease out some real opportunities, some hidden things. But thinking creatively about opportunities and problems is really important.
And what about the industry generally? Do you think they have big challenges now as the defense budget probably comes down a bit?
So I think that we are all responsible, and we have an obligation to find the latest and best technologies that we can for our customers and deliver them in the most cost-effective manner we can. And I think that that's a challenge and an opportunity for all of the big defense companies.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Election day in the U.S. Millions of American voters will decide who will control Congress. Meanwhile, Donald Trump is all but confirming he'll make another run for the White House. More tech troubles. Shares of Lyft are falling after reporting that ridership growth was weaker than expected. The ride-hailing company is losing ground to its rival, Uber. And global leaders try to keep up the momentum in the fight to curb greenhouse gases. I'm Anna Edwards in London with Scarlett Fu in New York. Matt Miller is off today. Kaylee Lines is on assignment in Pennsylvania. And Scarlett, it is the nature of that assignment, the political story at the center of what we're doing here today at Bloomberg TV that, of course, hangs over markets. That and inflation data later on this week. With all that said, European equity markets then fairly range-bound this morning.
And that's kind of the case here in the U.S., although we are looking at a higher open for now. If you look at U.S. markets, futures currently indicate an up arrow. And as Anne-Marie was telling us earlier, it will take a while for us to get a read on the midterm election outcome. So before then, we are going to get the Thursday print on CPI. And so right now, futures indicating higher, up by 0.1% for S&P futures. The 10-year yield finding some direction in that it is staying pretty stable, 4.19%, just below that 4.2% mark after a big move up last week. Bloomberg Dollar Index showing little change as well. There's a theme here. And Bitcoin, a big mover here, falling below $20,000. We're also seeing Ether and Solana also moving lower. Some weakness in that crypto space overall because of drama between CEOs of, rival CEOs, I should say, of FTT and Binance. Moving to pre-equity movers, we are looking at Lyft, as you mentioned, Anna, down about 20%. Lyft's ridership weaker than expected, also has not rebounded to pre-pandemic levels, unlike rival Uber. Take-Two is down almost 19% in the pre-market trade after cutting its annual forecast for net bookings. The video game publisher blamed the stronger U.S. dollar, like everyone else, and also the weak macro environment for that drop in forecast. NVIDIA, as Alex Webb was telling us earlier, is getting a bit of a lift in the pre-market trade here because the company is making a chip for China that meets U.S. export rules. The stock has actually lost more than half of its value this year because of the overall weakness in tech stocks and also slumping demand for semiconductors after initial supply shortage during the pandemic. And Disney, we're keeping an eye on here because it is up 0.4% before its earnings after the market closed today. Netflix, of course, beat its estimates for subscriber additions, so the question is whether Disney will as well. The thinking certainly right now is that Disney is in a pretty good position to do so. Anna?
Yeah, really interesting to watch that Disney number. How much will they talk about the strength of the dollar? That could be an interesting one as well, Scarlett, given the global nature of their business. This is the European equity markets then in limbo as we head towards the midterms in the United States, as we head towards Chinese factory gate inflation data, the US CPI data. So stocks Europe 600 up by 0.2%. To the four, gaining in Europe, up by 1.8%. Technology stocks catching up a little bit with what we saw on Wall Street yesterday. Energy stocks, though, are declining. So because of a bit of a pullback in the energy, in the oil price, we are therefore seeing some of those energy names moving a little bit lower. This is the UK two-year yield, 3.2%. Interesting, a lot of commentary coming through from the chief economist at the Bank of England, Hugh Pill. Recently, the comment from the BOE has been that the markets are pricing in too many rate hikes from the Bank of England. So see how that conversation develops and the contrast with the Fed, if it is exactly a contrast, how that's going to pan out. And Persimmon, this is a company, of course, that was riled by all of the chaos that we saw in gilt markets, in UK government debt markets. Persimmon is the largest house builder in the UK. They used to return a lot of money to shareholders as well. The stock down by 5.9%, as it seems that particular phenomenon is at least reduced then, Scarlett, as it becomes more difficult to sell homes here in the UK with all that chaos that we saw post the so-called mini budget, Scarlett.
Yeah, a lot of drama there. There's drama here, of course, in the U.S. with election day upon us. So the question really is, what is Wall Street's state of mind in the lead up to the 2022 midterms? Here's some insight from Bloomberg's latest MLive Pulse survey. If you're a stock market bull, you're probably rooting for Republicans to win big in the midterms. That's according to the latest Bloomberg survey of professional and retail investors. It found that more than a third of respondents see the GOP winning control of both the House and Senate as the best outcome for U.S. stocks over the next 3 months. Only about 1 out of 5 expect stocks to rise if Democrats manage to keep their leads in Congress. And if there are highly contested outcomes or worse, social unrest, more than a third of respondents say that would send stocks falling. Here's why the stock market favors a GOP Congress this time around. Investors, on the whole, like political gridlock. Actually, what they really like is business as usual, and a split government gets them there. A president's policy agenda often ends up stalling out, which means fewer consequential laws will be passed. This then removes one source of uncertainty in a world where war, disease, and widening inequality are all pressuring the global economy. There is one thing that might benefit if the Democrats keep control of Congress: the dollar. Here's the rationale. It'd be easier for Dems to pass legislation to boost social programs and government funding. That spending tends to be inflationary, which would keep interest rates elevated, increasing the dollar's appeal relative to other currencies. Joining us now is Ron Temple. He is Lazard Asset Management co-head of multi-asset and head of U.S. equity. Ron, so good to speak with you. Good morning. I'm curious, how have you positioned for the midterm elections? What kind of changes have you made to your portfolio?
Well, I actually think the midterm elections are often exaggerated in terms of the importance they have to markets. If you really boil it down, I think the summary you just provided is quite a useful one. Stock markets are a discounting mechanism. They're trying to think about what future profits will be for companies. And effectively, when we look at the future profits, they're not likely to change materially based on whether Democrats or Republicans control the House or the Senate. If I look at the elections, I think the most important changes that might come out of Republican control of one or both houses of Congress, it would be number one, issues around the debt ceiling, which I would argue is more of a left tail optionality in terms of debates or even conflict over raising the debt ceiling that could lead to risk of default on treasuries. And number two, it might be around over time funding for Ukraine's war effort, as there is a growing bloc in the GOP that has indicated an unwillingness to extend that financing. Beyond that, I think, as you discussed earlier, gridlock is the natural outcome. Historically, people viewed that as a positive. I would say maybe that's the wrong approach to thinking about markets. There are major issues facing the global economy. With COP27 underway right now, climate change should be front and center for everyone. And the worst way to deal with that is gridlock. So I think people might want to recalibrate how they think about the benefits of gridlock versus having one party actually in control of the legislature and the executive branch.
Yeah, good to see you, Ron. Then we're into really complicated conversations, aren't we, about the shorter-term interests of the stock market and the longer-term interests of sort of everybody. But in terms of where the midterms take us, so you say that we shouldn't necessarily be too simplistic and say stocks just go higher after the midterms, but they have done often. What would stop that from happening, do you think?
Well, it's funny. I've heard a lot of anecdotes of after the midterms, after the last 19 midterms, stocks are higher 12 months later. I don't doubt that that might be the case, but I think if you look back, Out of those midterms, how many of them had a Fed that had raised rates 500 basis points, shrunk its balance sheet $500 billion, and had a recession? None. So I don't know that there's a statistically robust sample for this kind of extrapolation. I just think we have to be very careful to examine the current situation. I personally believe we're within 3 to 6 months of an equity market bottom. So that's why I'm willing to say we might well be higher in 12 months. But I don't think it's a surefire bet. I think it's coincidence, not causality in those historical references.
Okay, 3 to 6 months from the bottom. And so what is crucial for you to watch when you're working out when that bottom is going to kick in? It's got to be about the Fed conversation, I suppose. Absolutely. But also, what about earnings? What clues are you looking for?
It's both. I'm actually waiting to see the Fed's tightening of monetary policy really show up in the inflation data and the job data. We got 261,000 jobs last month. We need to be around 60,000 jobs a month to have unemployment stay constant. And we need to be around 0 jobs per month if unemployment is going to go to 4% over the next year. We're a long way from there. And the reason I'm focused on labor is over half of the cost of goods sold in the U.S. is labor. So right now, labor has leverage. If you want to raise and you're a good worker, you're getting it. Now, the other issue I'm looking for in the CPI is shelter inflation. We've seen shelter costs rising 9 to 10% a year in the CPI index, but in real world indices, apartment REITs and the Zillow Observed Rent Index, we're seeing 11 to 12% rent increases. So I'm worried we're going to see that stretch into the first and second quarter of next year. I need to see that roll over to believe inflation is really getting under control.
Okay, Scarlett.
Yeah, renters are definitely looking forward to some kind of rollover there. I want to focus again on that CPI report that's due out Thursday. Given the constant hope for some kind of Fed pivot, what exactly is priced into equities? What isn't?
Well, it's interesting. The consensus says we'll have a 0.48% month-on-month increase in prices. And many of the forecasts I'm reading lately from the bulge bracket banks are saying maybe it's 0.4%. I think the market is leaning towards a positive surprise on CPI this week. I would just caution against extrapolating too much from one reading. Focus on the shelter component. Last month's shelter was about 31 basis points of the total core CPI for the month. Effectively, to get down to a 3.5% annual core inflation rate, you would need everything else in that index to be at 0 and have shelter where it is now. So I think we want to watch the trajectory of shelter. We want to watch the labor market. And some of the other pieces like used cars, new cars, you know, there's a little bit of noise there, but we really want to focus on that shelter in this Thursday's report.
And Ron, longer term, you see inflation settling at a higher range than it was pre-pandemic, thanks to a bunch of structural shifts. First and foremost, of course, is deglobalization, but also climate change. Explain that a little bit here.
Yeah, on the climate change front, I believe we as a global community are going to spend trillions of dollars a year on adaptation to climate change and mitigation of climate change. And that's unavoidable. This is not a political question. It's a matter of when, not if. That money will be spent to hopefully just preserve the current standard of living we enjoy. Now, to me, that is the definition of paying more for the same goods and services. It's almost definitionally inflationary. But at the same time, a result of climate change will be more climate volatility. I was in St. Louis last week, and if you look at the Mississippi River, it's at multi-decade lows. It's been difficult to ship agricultural products through the Mississippi. We saw it with the Danube last summer in 2022 in Europe. We're going to see more issues where you need redundancy in supply chain or transportation networks. We're going to see more volatility in food prices coming from climate change. And I think that will all feed into a more inflationary environment alongside that deglobalization that leads to higher costs as you move away from Chinese production.
Yeah, those low water levels, issues for exporters, also for nuclear power and some of our alternative energies. Ron, thanks so much for joining us. Ron Temple of Lazard Asset Management joining us here this morning here on Bloomberg TV. Coming up on the program, back to our coverage of the U.S. midterms with Elizabeth Braw, American Enterprise Institute Senior Fellow. We'll talk about some of the domestic issues, of course, associated with this election, also get a global perspective. This is Bloomberg.
any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Bloomberg is live at COP27 in Sharm el-Sheikh, Egypt. Bloomberg Television and Radio brings you continuing coverage as world leaders, business insiders, and decision makers gather to take action toward achieving the world's collective climate goals.
What are your top 3 priorities?
There is an ability always to find the new and innovative ways to meet the challenge and at the same time take into consideration the pressures that exist.
Special coverage continues only on Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Scarlett Fu in New York. Matt Miller is off today, and Kaylee Lyons is on assignment, in Pennsylvania. A critical mission, of course, at this time. Talking of U.S. politics, the U.S. midterm elections are expected to usher in a new era of divided government, with polls showing Democrats losing control of the House and possibly the Senate. Bloomberg's Anne-Marie Hordern explains what's at stake.
Joe Biden's hoping the Democrats can pick up seats in both the House and Senate in Tuesday's election. History says they probably won't. Look at the last 7 presidents. Almost all of their parties lost seats in midterm elections, and some of those losses were significant. Democrats had hoped they could run the issue of abortion rights following a controversial Supreme Court decision. But surveys show that inflation is a bigger issue for voters, and President Biden is getting a lot of the blame for it. In the House, all 435 seats are being contested. Republicans only need to pick up 5 seats to take control. Polls indicate they should do that easily, and they will probably pick up more. The Senate is seen as a toss-up, with 35 seats being contested. Right now, the chamber is divided 50-50, with the Democrats in the majority because Vice President Kamala Harris can vote in a case of a tie. Republicans need to gain just 1 seat to take control. The Senate could come down to close races in a number of states, including Pennsylvania, Georgia, and Nevada. It's possible we won't know who will win for a number of days. Anne-Marie Hordern, Bloomberg, Washington.
Joining us now with analysis, Elizabeth Braw, Senior Fellow at the American Enterprise Institute. Elizabeth, good to have you on the program. So we were just listening there to our colleague Anne-Marie Hordern explaining some of the mechanics of what's at stake here. Are we looking at divided government? What does your analysis suggest?
It looks like we are, and why that matters so much is that clearly from a domestic policy perspective, it matters across the board regarding the economy and so forth, but it also matters regarding a really crucial foreign policy, defense policy issues such as support of Ukraine. Will that support continue? Will it not? And we should remember that a number of the Republican candidates running for office are of the Trumpian bent, meaning they take an America First approach, wanting to do more for Americans, and they are critical of support for Ukraine. It could be, of course, that if they win seats in the House, they then learn about the implications of foreign policy and say, well, we really should support Ukraine. But at the moment, there are a number of Republican candidates who say that it's unwise to support Ukraine when Americans at home need support.
Elizabeth, it's going to be a while before we get the final read on how the House splits and, of course, what happens with the Senate. But the consensus is that we're going to get a divided government. Walk us through what we might expect when it comes to foreign policy during the lame duck period.
Well, first of all, what we should prepare to expect is that there will be a number of people, perhaps on both sides, throwing doubts into the election results, especially in close races. And we should remember that just yesterday, the head of the Wagner Group said, Yevgeny Rogozin, said that we have continued to interfere. We interfered, we are interfering, we will continue to interfere. And who knows what the Russians are doing? It's unclear at this moment, but it almost doesn't matter how successful they are if he and other Russian officials in various capacities are able to give Americans the impression that Russia is interfering. Then that throws the election results into doubt in people's minds. They'll say, well, maybe this was not the result after all. Maybe the Russians interfered. And if Americans don't trust the results of their election because they fear that, or they have the feeling that the Russians have interfered, that is really incredibly dangerous for American democracy, because that means they won't trust the outcome of the election, i.e. the House and Senate taking their seats. It's incredibly dangerous. And the closer the races are, the more opportunity there is for people to doubt the validity of the votes cast, and the more opportunity there is for Russia to keep making suggestions that it has interfered.
Right, Russia kind of dancing on the side there when it comes to whether there is any interference or not. As we were talking earlier, Ukraine is the backdrop for COP27 that's taking place in Egypt right now. From where you sit, do you see global leaders emerging out of that gathering more or less committed to aiding Ukraine against Russia?
It has been remarkable to date how united global leaders have been. But we should also, regarding Ukraine, but we should also remember that the unity has been on the Western side, meaning the US and Europe. We haven't seen much support from Ukraine from, for example, China or India. And one would have hoped that the COP summit would be an opportunity for these leaders, not just from the West, but from other major countries as well, to come to some sort of agreement on Ukraine. I don't think that would happen, simply because China and India, which are the most important countries that haven't really taken a position on Ukraine, they are not likely to well, they don't want to be lectured by the West, which is how they see the West acting. And so they are not going to be open to any sort of convincing, even at this sort of more neutral occasion of COP27. And we should remember also that the Western governments need China and India to come to an agreement on climate change, which is really an even more urgent issue to tackle than the war in Ukraine. So it's an incredibly difficult situation, and it also gives a view of what the world would be like if China were the sole superpower. It's not willing to take a position, for example, if a country is invaded by another country.
Elizabeth, thinking about climate change and keeping the West on one page on that front, I was looking at there's a couple of news lines coming through from Europe, from France and from Germany, anger being expressed by finance chiefs around the Inflation Act in the United States and the amount of support that's going to provide for clean technologies perhaps in the US. And that seems to be, in the views of Europe, creating a non-level playing field. Are these, we've been here before with transatlantic tensions, but under, of course, a different US leadership. These things can be worked through, can they?
With technical things like that, such as support for clean technologies, it's likely that the EU on one hand and then the UK sort of joining the European side and the US can come to an agreement, because we are all these countries all want to work, all trying to work towards the same goal. The big challenge there is if Donald Trump announces within a few days, as he has hinted, if he announces that he is running for re-election, that puts U.S. politics, that gives yet another twist to U.S. politics, in addition to perhaps a divided House and Senate, and there may be less willingness on the U.S. side to reach some sort of agreement with the EU and the UK about creating a level playing field, simply because that's not something that Trump is particularly keen on.
Elizabeth, thanks so much for your time. Elizabeth Braw of the American Enterprise Institute. Thanks for joining us. We will take a short break now, then we'll get a rundown of what is ahead today. This is Bloomberg.
What do you think of when you think of a battery? For most, it's what we use to power devices for both work and play, and maybe even your car. Over the past few decades, they've gotten way more powerful, long-lasting, and affordable. But all of this is just a prologue to what the next batteries are going to do.
As we drive to an increasingly renewable power-driven grid, we also need to be able to store energy and release it later to cover those periods of weather intermittencies that are driving this new grid that we're in. It's a multi-trillion-dollar opportunity, and it's imperative that we figure out the solution here.
How we store energy on a massive scale is in many ways the central challenge of the fight to stop climate change.
Let's wrap up with a look at what's ahead for the day. At 11 a.m. Eastern, SpaceX is scheduled to launch its Falcon 9 rocket from Cape Canaveral Space Force Station in Florida. Then after the market close, Disney is due to post earnings. It's expected to report Disney Plus subscriber additions, with consensus calling for growth of about 38% year over year. The UN Climate Summit COP27 continues in Egypt. Today's theme is decarbonization. And also today, millions of Americans, Anna, are voting in midterm elections with the balance of power in Congress at stake, and the number one issue, the economy. And of course, big questions about inflation ahead of the Thursday print of CPI. That does it for Early Edition. Surveillance is just ahead next with Tom, John, and Lisa. They're hosting live from Washington, D.C. We'll hear from Julie Norman of University College London, among others. For Anna and myself, thank you for watching. This is Bloomberg.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, you know, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. Because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays, this is Bloomberg.
There is some built-in resilience that we're starting to see from the economies.
The consumer has the savings buffer. The savings buffer is coming down.
I don't think we're actually deglobalizing. I think we're just globalizing more slowly.
If you look at that labor force participation rate, it's still stubborn and it retreated last month. That is an issue because that suggests a bit more permanence.
This looks like a cycle that the Fed let get out of control.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from the nation's capital for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures just about positive on the S&P. TK America decides.
It's a midterm election. They're different than a presidential election, but the question is this one the same or different than 4 years ago, 2018? I think that the key word here going into tonight's broadcast with David Weston is uncertainty. There's never been such uncertainty over the polling, over the outcome, over whether we'll know tomorrow morning when we do this here in Washington.
We can be certain about one thing, Tom. We can be certain about this. One of the major issues over the last couple of months, in fact, the last year for that matter, has been inflation. Now, what's not clear to me at this point is who they will blame that on. Will it be the White House, the Federal Reserve, or just global issues that have dominated the economy for the last 2 years?
There's no question the inflation is being blamed on President Biden, even among Democrats as well. And I think with Bruce Kasman coming on here in a moment, the J.P. Morgan note of Friday was very solid about an ebbing inflation, clearly too late for this election, but even an inflation report Thursday, again, with massive uncertainty into next year.
We've had a two-day rally into this vote, Bramo, and overwhelmingly the consensus view on the South side has been divided government good. Divided government is good for this market. We've got to probe that one a little bit more, haven't we?
For how long is it good, right? Is it short-term good? Is it long-term good? If it's long-term, how long does it stay long-term good if you don't have fiscal spending to offset potential downturn? To the point that you guys are talking about who's going to claim credit on the flip side, or who's going to take the blame, or who's the people are going to blame, who's going to take the credit if Republicans do win, right? Is this going to be Donald Trump sweeping to the next election cycle saying, this is all me? Is it going to be somebody else saying, whether it's McCarthy over in California saying, no, it's because of me? I mean, honestly, the credit game is going to be interesting to watch too.
Did you see the former president has a big announcement, his words, big announcement to make in the coming week?
But he didn't want to take away from J.D. Vance's rally. So he didn't want to suck the oxygen out to announce anything now. So he's going to wait for November 16th, and then he's going to make the announcement.
I think he sucked some of the oxygen out of the conversation already, Tom Keene, around the midterms. The fact that a former president looks set to get ready to make another run at this.
Yeah, no question about it. He's gotten in the way, and particularly for some Republicans in very, very close races. I was shutting down the Round Robin Bar last night at the Willard Hotel. And, it's very strange, folks. For those of you internationally, And even across this nation, it is strange for me always to be in Washington on an election day. It's sort of an out-of-body experience as a nation.
You could describe that out-of-body experience as the show goes on. How about that?
Will.
Okay, I'm going to whip through the price action.
Please do.
Equities look like this on the S&P 500, just about unchanged to positive, up almost 0.1% on the S&P. In the bond market, no action here, no real price action anyway on a 10-year, just short of 420, just north of 420 at 420.54. And Bramo euro dollar here, 99.92. We're down about a third of 1%.
Yeah, although I really can't get a sense of direction from anything right now. It feels like sort of a hold and wait. Coming up today, we are going to watch Tom Keene's out-of-body experience as he is in Washington, D.C. on election. No, I'm just kidding. This is midterm elections, and we're going to be watching everything come out. I am very curious to see how much the Republicans pick up, both in the House. All of the House seats are up, but there really is about 33 races that are toss-ups. 23 are currently ahead by Democrats. And 10 by Republicans. That's according to the Cook Political Report.
My number's 61 of 435. I could be wrong on that, but that gets about where you are.
But I think that that's what people are assuming, that some of these races might be a lot closer than some people think. And I think that that is the balance of power and more of the contentious.
That was great. Deeply read it.
The out-of-body experience was just absolute gold. 1 p.m., this is just for you, because just to have a full out-of-body experience, there is going to be an auction of $40 billion of 40-year notes.
We have an auction in Washington.
But this is interesting. Because look, this is interesting. How much pressure are people going to feel for the Fed to back away from some of what they're doing in the face of the election?
Tell me they do the auction at the cash room over the Treasury Department. We can go over there under Gallatin's statue and see the auction in the cash.
We'll go to the mint and they'll just throw money.
Right now.
Honestly, this conversation is the same every single time. Bramo mentions an auction. You start laughing, and she says, but this one is interesting, and let me tell you why it's interesting.
Okay.
Is anyone paying attention to this today?
Let's find out.
Okay.
If you are, let us know. After market, we do get earnings. They are continuing. Today, Disney, AMC, and News Corp among the notable ones. Disney's going to be really interesting, especially after Netflix beat, right, in terms of the subscribers. How much traction is Disney getting with their online offerings?
Cassie is Commander saved.
That's great. I'm going to just wrap it up there, John.
Thank you. Looking forward to AMC as well a little bit later.
Yeah.
Bruce Kasman joins us now, Chief Economist and Head of Global Economic Research at JP Morgan. Bruce, fantastic to catch up with you, sir. Is divided government the best outcome as far as you're concerned? Do you have any pushback against that whatsoever?
Well, I think divided government means you're not going to get very strong action in terms of things like fiscal policy. And in the context of how high our deficit is and how much we've already done, that's a good thing. I think the concern is that if you have a need for action because of a recession or some other crisis, it's going to be hard to see government mobilize. Also, you have to worry about brinkmanship, things like debt ceiling crisis, government shutdowns. Those are going to come back into the picture clearly as we move towards next year.
Bruce, we blame politicians for inflation. Can politicians cure high inflation?
I think inflation is always an interaction between things happening in the global economy, which are not in the hands of politicians, and also what the political economy, not only the central banks, do in response to that. And I think what we could say about the inflation spike of the last year and a half is it's not primarily a central bank phenomenon, not primarily a political phenomenon, but how this is going to play out over the next couple of years is largely going to be a response by policy, how much they're committed to bringing it down. We think that inflation is moving down, and it's going to move down in the core number this week, and I think will continue, but it's not going to move down by enough to get us back to 2%. And that's going to require the Fed, and unfortunately, probably at some point, require a recession in the U.S. to deliver that unwind.
Bruce, what components are you watching within the inflation print to understand the pace of how much is coming down?
Well, I think what we're going to see is really a big dynamic of goods prices moderating. The energy story is going to pop up this month, but it's still on a broad downward trajectory. But I think core goods fall both because supply side pressures around the pandemic are starting to ease, as well as the dollar having moved up here. We see import prices falling for 5 straight months in the U.S. That's going to be magnified by what's happening in the auto sector, where prices are coming down. There's also some help coming, I think, in healthcare prices in the CPI. That's a bit more of a technical issue. But rental shelter price inflation is going to be the factor that's going to keep things up here and prevent us from getting a more substantial fall in the next number of months. We think we're on track for 0.4 this week, 0.3s in the next 3 or 4 months. That's a significant step down, but it's not bringing us back to where we need to be.
Bruce, over the past few weeks, we've been talking extensively about whether a reopening in China, whether an acceleration in the Chinese economy would be a good thing or a bad thing, right? And from a supply chain perspective, perhaps that would be a good thing for the U.S. economy and more broadly, because it eases some of those pressures that we're seeing, for example, with the iPhone 14 right now. But on the flip side, there is this question of bidding up a lot of commodities and this question of competition and this question of, well, does that increase demand so much that the supplies can't keep pace? So how do you even begin to think about this?
Well, I think the issue about the supply chain in China normalizing in Asia more generally is a big disinflationary impulse, and that is built into our forecast. I actually think the big story about China is how much is it slowing after a reopening bounce in the third quarter. The housing sector is problematic. There still is COVID problems. So if we see China actually slowing quite sharply into year end, probably growing less than 5%, which for China is a relatively weak outcome. So from our point of view, the bigger issue on China is it going to be a negative impulse on global demand. Obviously, if it was strong, that would tilt in the other direction on the global inflation scene.
Bruce, over the last 12 months or so, this administration a few times has floated some trial balloons around changing policy over the tariffs on China. The one thing that people agree on down here in Washington, D.C. is a strong, tough stance against the Chinese Communist Party. Are you expecting that to change at all after these midterms?
Not really. There may be some opportunity for relaxation on tariffs. It's not built into our forecast. If that would happen, it would help a little bit on the inflation scene. I don't think that's going to be the main story on U.S. inflation, and I don't think it's going to be the main story on U.S. policy, where I think you're correct. I think in tech, I think in other areas, we're getting tougher. There's more of a decoupling taking place here and more, I think, contentious policy that's going to continue in U.S.-China relations.
Hey, Bruce, wonderful to hear from you, as always. Bruce Kasman there of JP Morgan Asset Management. Equity futures this morning up about 0.1% on the S&P 500. Two-day rally, Friday, Monday, into these midterm elections. And Tom, the criticism of the Federal Reserve, Maxine Waters, Democrat, went after the Federal Reserve on Friday. And not the first, and I assume won't be the last, and the pressure's building in a much bigger way.
It is, and what's interesting there is I place Ms. Waters at 84 years old as away from the Sanders-Warren group. She's much more authentic, glued, no doubt, to the the Los Angeles mayoral race today, which has got to be front and center for her. But there's just no question it is broadening out, and you've got to believe when the results are in and we go through a lame duck session, this is really going to get heated on both sides of the aisle.
Yeah, I agree. Lisa, I think it's going to be fascinating to see how this criticism builds and how ultimately Chairman Powell responds to it, if he does at all. Because in that news conference last week, I have to say, if that was a rebuttal, it was a pretty strong one to these particular politicians.
Not just a rebuttal, also his line is, in order to have a stable and good labor market, you need to have some sort of stability in the prices, right, in inflation. And that is sort of their argument. It's not reading through. If you take a look at what you're seeing in the polls, if you're seeing what it's taking a look at how people are feeling.
I just want to emphasize, John, the uncertainty today is extraordinary. It reminds me of 1994. It was just extraordinary, just in the last 24 hours.
We'll build on that in just a moment. Equity futures right now up around about 0.1%. In the next hour, Anna Han of Wells Fargo on this equity market. Looking forward to that conversation. From Washington, D.C., the nation's capital, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. As millions of Americans prepare to vote today, President Biden admits Democrats face a tougher challenge holding the House than the Senate in midterm elections. Republicans are favored to take control of the House. The battle for the Senate is considered a dead heat. Donald Trump has all but confirmed his widely anticipated third run for the White House. He told a rally in Ohio he would be making a, quote, very big announcement next Tuesday at his estate in Florida. The former president is hoping to take advantage of good election results for Republicans. Russia's heavy casualties in Ukraine reportedly have led to an unusual public outcry. That's according to the Washington Post. The newspaper reports surviving soldiers and family members of the recently drafted troops say their units were slaughtered in poorly planned operations. Russia's defense ministry downplayed the loss of life. The U.S., EU, and Japan will announce a commitment to clean up methane emissions tied to the extraction and transport of oil and gas. It's also a follow-up to a pledge they made a year ago at the UN's Climate Change Summit. At this year's conference, about 40 countries will outline their plans for cutting methane emissions. And Nintendo has cut its fiscal year forecast for Switch console sales by 10% to 19 million units. The Japanese company blames the shortfall in part on a prolonged chip shortage. Nintendo says it's now front-loading production to maximize delivery in the holiday shopping season. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
What do Formula One cars and your local supermarket have in common? Well, strange as it sounds, they might both be using the same technology. A lot of innovation has trickled down from the world of high-tech engines, and it hasn't just found a new life in road cars. F1 cars have long been thought of as the peak of cool, and technology in them is also helping to cool down our produce aisles. Engineers from Williams are using their knowledge from 9 Constructors' Championships, working with company Aerofoil to help reduce the energy consumption of supermarkets. The device they're building is based on the design of an F1 car's rear wing. It attaches to fridges to keep more cool air in the unit. They estimate it can reduce supermarket energy consumption by 25%. One innovation from F1 is also helping hybrids reduce their carbon footprint. That's KERS, or the Kinetic Energy Recovery System. In common parlance, it's known as regenerative braking and works by storing energy of the car decelerating in a battery for later use. If that's not enough, F1 is now looking at TERS, or a thermal energy recovery system, looking to harness the heat produced from braking and the engine exhaust. That could allow cars to generate the same power using 30% less fuel. So while F1 may have a reputation as a gas guzzler, some of its innovations in the name of speed are helping in the everyday fight against climate change.
Power, policy, politics. From the White House to the Hill, Bloomberg covers the leaders in legislation.
That was really a tectonic shift for this White House.
The theory of this bill, as I understand it, is there'll be a multiplier effect.
How did Democrats mobilize specifically younger voters?
Bringing you the political news you need to know.
The president has made it very clear that this is a significant focus.
For the intersection of Wall Street and Washington, nobody covers politics like Bloomberg.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
A multi-trillion-dollar industry. There's a lot of ground to cover.
Commodities got absolutely crushed.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ. Monday on Bloomberg. Tonight, as America Americans decide the future of Congress and state legislatures. Bloomberg will be live in Washington, D.C. to cover the results as they break and provide insight about what it means for the country.
We're in a divided country, and these are really close elections. We take a look at what the races could mean for Wall Street.
Special election night coverage starts at 8 p.m. on Bloomberg Television and Radio. And tomorrow, tune into Surveillance live from D.C. at 6 a.m. for the latest overnight. This is Bloomberg.
Remember, the power's in your hands. You're one of the reasons why I've never been more optimistic about America's future. I see great nation because I know we're a good people. We just have to remember who in the hell we are. We're the United States of America.
Election day in America, the President of the United States, live from Washington, D.C. This is Bloomberg, and it's the price action. The equity market looking a little something like this on the S&P 500. Positive, a little more than 0.1%. Yields lower by about a basis point on a 10-year, 420.33 on a 10-year yield. And there we go, parity. Again on euro-dollar. Parity in yesterday's session, just about holding on this morning. Euro-dollar, Tom, negative 0.2%.
John, I was surprised. Dollar weakness here, and somebody told me it was back to the beginning of the pandemic, like 2-3 days in a row of dollar weakness. I didn't realize how unusual that has been.
Has it been a while? It's been that long?
It's been that long.
I will double check that. I did not know that either. I think that's worth confirming. I'll look right now.
It still is notable, though, that you are seeing dollar weakness after everyone was saying there's no reason for there to be dollar weakness given the unfortunate position globally. So how much is this technical? How much is this some serious reset where people are saying the dollar is kind of
quickly? I like what Michael Scholl said yesterday, where he said you got to have a weak dollar to make EM go, make international.
I thought what Michael Scholl had to say about the equity market in America was, for some people, frightening.
Yeah.
He said if you've bought the equity market, big tech, at some point in the last year, you're going to be remorseful for the next several years.
We are in Washington. There's a midterm election, which means Anne Marie Horton is front and center, our Bloomberg Washington correspondent, starting the day early, and we'll go this evening into our special coverage as well. I want to talk to Anne Marie about some of the vignettes out there, and one of them is in Ohio. Mr. Vance does better than Mr. Ryan over the last number of days, and it's so delicate here about the dynamic state to state that the Democrat Ryan has to haul out Dave Matthews on October 24th to get it done. Help me with that.
Well, he just doesn't want anyone from the White House, right, or any big-name Democrats coming to his state because he doesn't think it's going to help. He is trying to get those voters in the middle, whether they're the middle that lean left, the middle that lean right. He wants them to vote for him. So he knows that for Ohio, this is likely a referendum on the Biden administration. So he'd rather campaign with Dave Matthews to get people out. But what's more interesting about what's going on in Ohio is, of course, what happened last night at the J.D. Vance rally, which might as well have been a former President Donald Trump rally, and which he prompted to say he has an announcement. How does that play?
With your, we're amateurs at this. With your perspective, what is the play of the former president? What, John, countdown to November 15th?
Something like that.
Yeah.
Yeah, he said it yesterday. November 15th, he has a very big announcement at Mar-a-Lago.
Did he get in the way of Mr. Vance's efforts?
I don't know if he got in the way of it, but he certainly drew more attention to himself than the individual he was going there to try to help promote, which this has tended to happen a few times over the past couple of weeks.
John, the Dave Matthews Band is a band that plays a Birchmere here.
That's not Fire and Rain.
It's not.
That's not Fire. Who plays Fire and Rain?
Oh, my God.
No, that's James Taylor.
Earth, Wind and Fire, James Taylor.
David is a little bit after that. But
so easy to trigger you guys.
Yeah, I'm triggered.
Honestly, I can tell.
I know.
Relax. Let's talk about this race. Inflation's top of mind. We've talked about that a million times. Is it clear that everybody blames the president for it? Because if we were to have a nuanced conversation around this table with a group of economists, we'd talk about that fiscal package in early 2021. We'd also talk about central bank policy, and we'd talk about supply constraints around the world. Who do they blame it on?
Depends who you ask. So the Republicans clearly blame it on the Biden administration, and they'll bring it back to things like the American Rescue Package. Why were you giving out checks to individuals? If you talk to economists, they say that's marginal in the impact on the final inflation number. And then you talk to Democrats, and they say this is a global issue. And if you look at where the United States stands versus inflation around the world, actually the U.S. is in a much better shape. We're seeing countries in Europe that have double-digit inflation. And they point to Putin's invasion of Ukraine. They point to supply chain bottlenecks coming out of the pandemic. I loved what Hugh Hendry called it to you, Jonathan, an elephant moving through the body of a snake. That's how he views inflation right now, this one moment in history. But the issue is most voters, like myself, have never actually experienced this kind of price pressure. And you might not realize if your neighbor gets a job the way you would feel when unemployment rates going up. But everyone feels the cost of things going higher, rent, food, and then over the summer, gasoline.
So that's the blame story. I'm curious about the credit story, because it's widely expected to be a red sweep or a red wave, right? This idea of Republicans winning. Who gets the credit for that? Is this Donald Trump going to take credit for that on November 15th? Is this some specific candidates who are arguing some sort of true policy to counter inflation?
I think we need to see how it shakes out. I think Trump will get credit if his candidates get through, if Blake Masters gets through, if J.D. Vance gets through, if Mehmet Oz gets through, if Herschel Walker gets through. And these are individuals that the minority leader in the Senate, Mitch McConnell, questioned the caliber of these candidates, right? If these individuals get through, I think you can really paint this midterm election as another 2020 presidential election in the sense of the characters of Joe Biden versus Donald Trump.
Just quickly, how is a certain governor in Florida feeling this morning after that announcement yesterday evening?
Well, he's probably feeling, like you said the other day, they woke up, the worst man in America, feeling like the worst man in America.
The unhappiest.
Yeah, the unhappiest. Well, Donald Trump gave him a nickname the other day, and now, remember when it was...
Sanctimonious?
Sanctimonious.
But I stole that from Pharaoh, the way he talks about me.
But it came after an ad that Governor DeSantis put out that really was talking a lot about God and how he was created by God. And
do you and your sources feel that we are going to have debates of 8, 9, 10 candidates? Or are we going to get right to 2 candidates in both parties quickly?
No, I think it's going to be 8, 9, 10.
It's going to be a
when you already look at the Republican map, it's not just Donald Trump. It's Mike Pompeo. It's Mike Pence, who, by the way, November 15th is starting his nationwide book tour. So that was a little dig to his former vice president, I would say, from the former president. And then, of course, you have Ron DeSantis, where all the major Wall Street money is going towards.
The announcement for an announcement. Is that what yesterday was? Can we call it that?
You guys
an
do
announcement,
it so, John, you do it so much better.
You think? I think based on the events in the UK over the last couple of months, I'm not sure how many people agree with the idea that we do it so much better.
No, the UK election is 6 weeks long. The United States election is 2 years, maybe 4.
Yeah, exactly. Maybe 4 years.
30 days is what it is.
I've covered both. 6 weeks. You can handle it.
I think it started already.
Oh, yeah.
Never mind tomorrow.
Mr. Biden, when will we hear from Mr. Biden, whatever the results
When's the pre-announcement?
After the midterm elections, but obviously he's been dangling it. He was asked yesterday on a radio show about his age. And what would the 80-year-old Joe tell the 50-year-old Joe? And he said, I feel like I'm still 50.
Equity futures this morning.
Line all the time.
I'm 0.2%. AMH, thank you. You're killing me this morning. Yields down a basis point on a 10-year, 419.70. From Washington, D.C., this is Bloomberg.